right, guys, let's get some retweets and sharing in groups going. I don't know what's going on. We got a slow start today. What is this? Only 60 listeners starting out. Yeah, let's get some more people in here, guys. Help share this in groups, retweet, let your family know, and let's get it going on. GM. We'll let a little bit more music go. Get people up on stage. We'll go in like 1 minute here. All right. Good morning, pretty purple people.
GM.
Decided to kick this off. GIGABRAINS talk crypto market. I like the name. Guess it's we're talking trading today unless Rock brings up the Bitcoin topic and overtakes the trading show again.
That may have been a little bit of what happened last time. We had a kind of trading focused topic.
We didn't even get into trading, if I remember right. I think maybe just a touch, and then we went right into Bitcoin for like 30 minutes, and then the rest of the show was just like sporadic, all over the place. But it was still a good show.
Yeah,
but maybe this time we can do a little bit more trading. Oh, you know what? Actually, Shitcoin Shaman, weren't you there? Last time?
Yeah, probably.
I think you were there, man, and we didn't even talk trading, but good times. Yeah, so like always, we want to introduce everyone, but before we do that, I do want to read a quick disclaimer. So nothing on this space constitutes financial, tax, or any other professional advice. You should do your own research, and you should not rely in any way on anything discussed in this space. All right, Rock, should we go ahead and start introducing everyone?
Yeah, let's do it. And yeah, keep retweeting, guys. Let's share this with everyone. Let your communities know.
Sounds good. So I want everyone to introduce themselves. Let's take 30 seconds to do that. And then producer Darren thought it would be awesome to go ahead and see if you are a trader or a hodler right up front. And I do want to thank Polygon for being here today with us, and all the great work that the QuickSwap team does to make these things happen. So much love to everyone there and everyone on this panel hanging out on Friday with us, all the cool meme coins and KOLs in the audience. We got a lot. I can see a ton of familiar faces here. So Great to be here with you guys. Let's go ahead and start introducing everyone. I just go from left to right on my screen, no particular order. Let's go Martiverse. Nice to have you back on the show.
Hey guys, it's been a while. I suppose Happy New Year still. I haven't been here in a good few weeks. Quick one. So Marta is definitely a trader. So I'm super excited for this talk. Great to see amazing panelists and a lot of guests coming. I was encouraging people to even start asking questions already because I probably would be handy to know what people want to know when it comes to trading. But guys, yeah, trading is in my veins.
We definitely can see that. Following you, I know you post setups and like trading setups and talk about various different coins. So very awesome to have you here on the show. Can't wait to pick your brain, of course.
Hi, Marta. Good to see you.
Good times. But let's go ahead and pass the mic on over to Seth. Are you a trader or a hodler?
GM. I definitely would call myself more of a hodler. If those are the only two options, I'm a hodler. But I think maybe it's a little more nuanced than that, and I'm sure we'll get into that. But yeah, broadly speaking, hodler.
Cool. And chill yourself, bro. 20 seconds.
Hey, chill yourself. All right. Don't mind if I do. My name is Seth. I also go by the handle Mind Your Biz. I've been publishing crypto-oriented media, starting with proof-of-work style media or proof-of-work topics for going on 7 years. And under the handle Mind Your Biz, I run the website mindyour.biz, and but most importantly, these days, I run the advisory and marketing boutique Blocks Media Group. It's a very small boutique. We operate in a very interesting and unique space in crypto marketing and in fundraising and matchmaking. And that's why I absolutely love it when LDA runs, or when I get to hang out with the LDA team on the All Roads Lead to Polygon space with QuickSwap, because it's, it doesn't matter what the old days were like. You always miss them, right? You miss the good old days. It's like even when they were like not flawless, and there's little areas that are like whatever could be optimized. You love it, and I love the people here. So thank you for inviting me back. As far as a macro thesis, I mean, I'm a hodler because I believe that these things move in cycles, and I believe they all have their own natural rhythms. And I think that we have plenty of historical data to bear that out. So it's not that I am opposed to taking profits at strategic times. It's that my time frames are just longer. I try to be a longer term thinker in terms of those investments. So yes, hodler here. Yeah, thank you for the show.
Nice. Hodler.
Morning, Seth.
Yeah, just like Rock. Yeah, good morning, Seth, and great to have you here, bro. And I agree, it's always a good time hanging out with you. Now, let's go ahead and pass the mic on over to Shitcoin Shaman.
Hey, what's up? Thanks for having me on, guys. I'd say I'm definitely a trader first. I do. I mean, really, I guess you could call me a Bitcoin maximalist. I really only care about stacking Bitcoin long term, in terms of hodling. Monero would be a close second for that for me, but yeah, I mean, day to day, I'm trading and trying to roll those profits into longer term holds pretty much. And as for shilling myself, yeah, I mean, I'm a trader. I try to share setups and stuff, shit post on the timeline, keep it entertaining. I've also got an ordinals project that I'm a founder of, which is basically all around trading. It's all focused around trading education and stuff. If people hold the ordinals, they get access to myself and a few other traders who we're in there giving sort of one-on-one education or just spoon-fed calls, whatever people want, pretty much. But yeah.
Very nice. All the above. Sounds exciting, man. Especially Ordinals project, very hot, and it seems like I keep seeing all these different Ordinal type spaces. I know there's like the Dogecoin or Doge ordinals, and there's the Bitcoin ordinals, and everyone's talking about inscriptions and all. So it's a really hot topic. But trader as well. So great to have you here, so we can pick your brain. Let's go ahead and pass the mic on over to MC Squared Phi.
Hey guys, great to be here. I'm Chris, co-founder of MC Square Finance. With MC Square Finance, we are building a digital asset portfolio that makes it easily shareable, including with social tokens. And to start with, in the next weeks, actually, we just relaunched our website today. In the next weeks, we will launch trading competitions where you can compete with others for on-chain verified strategies and show off your true alpha. Personally, I'm definitely a hodler of Bitcoin and a trader of altcoins.
Nice, fellow trader, altcoins, great. And excited. You just said you just redid your site. Is that correct?
Yes, we launched it today. MC2.fi, just new and brand new, and we still do some small improvements throughout the weekend. But it's always exciting when finally projects get them launched to the public.
Cool. Definitely throw that in the Jumbotron above if you have a post. I forgot to tell everyone that QuickSwap actually posted today. There's an airdrop coming. You can find out more information by looking at the Jumbotron above. And then also, I'm getting pinged by our producer, Darren. So it looks like there's a giveaway for SPepe. Their NFT balls. So they say on Pepe is kind of like a
Mint balls, bro.
mint balls. Okay, my bad.
I
Wrong
think.
balls. But
Wrong
basically,
balls, bro.
you can get more information up above. It looks like you can join the Telegram, share a screenshot that you're listing in the spaces, and you'll potentially be able to win a ball. Just so everyone knows, we're not a sponsored show, but we definitely don't stop any great teams, Polygon teams, from doing a giveaway to the All Roads Lead to Polygon audience. So thank you, SPepe team. But let's go ahead.
Yeah, let's go giveaways. More giveaways. Give it all away.
I love the giveaway.
You get a car. You get a ball.
When you said give it all away, I don't know. It reminded me of like a Chili Pepper song. I don't know which one, but I think there's one out there. Anyways,
give it away
give us a
now.
rendition of
Give it away. Give it away.
There we
give
go.
It away now.
There we go. Someone knows. But was that
Something
you, Rock?
like that. Yeah.
Okay. Yeah.
Love me some chili peppers, man.
ADHD brain, bro. All right. Let's pass the mic. All right, going left to right. The panel's moving around here on the screen for me, but we cannot go wrong with Michael. What's up, brother?
What's up, man? I was also saying give it away now, but I didn't want to interrupt. Lovely people, thank you very much having me back. Rock, Aztec, everyone else. I wasn't here for 2 weeks or so, quite busy traveling a bit. I'm usually you introduce me with a VP of Engineering DappRadar, but I left DappRadar because I will tell you exactly, because I am a trader. I have started my own business, which is quite exciting. So yeah, I might be excited talking about it now. It's called autotrading.vip. You can check it out on my profile. In any case, I learned a lot of stuff at DappRadar while having massive amount of access to data, or access to massive amount of data, let's say like that. And I learned that some signals actually produce good trade setups. And I started automating them, wrote some software to automatically buy and sell. And it worked so well that now I'm super excited to educate people on these things. So yeah, if you go there, it's an educational thing where you can learn how to use automatic trading, and also you have access to some strategies. So that's me shilling, okay? Other than that, obviously I'm an engineer, as you can hear, because I've developed trading strategies. Not everyone does that, just like that. So I'm a trader simply because I think mathematically I can prove that you can make more. You have more purchasing power over time, but I'm also quite in the camp of stacking more sats over time. So I roll back into Bitcoin and I roll back out, and then basically that's it. And during the bear markets, keeping my funds safe on hardware wallets, right? Keep that in mind as well. So yeah, that's me. I love to share more of that later on during the space. Thanks for having me again. Let's go.
Is that 3 people who said they trade? I think that's 3. Let's see,
That's
Shaman, someone
Marta.
else, and Michael
as well.
said, maybe Seth said they hodl Bitcoin and they trade altcoins, or that they even specifically a couple of you have said you trade altcoins to get more sats. I like that.
Let's
Hey,
convert rock
we
today.
got a little clip for you
That's
guys.
the
real
name
quick.
of the game, man. That's the name of the game. Increase the Bitcoin.
Here, we got a little clip real quick.
There's the song. Give it away, give it away, give it away now. Yeah.
It's like Violette was on this stage.
What's that?
It's like Violette was on the stage there.
Hey, don't give away
Yeah.
your sats. Don't give away your sats. All right.
Yeah, just
Change
not
the
your,
title.
just not your stats.
Special guest, Red Hot Chili Peppers, live.
Yeah, we're gonna get our account deleted. Good times. All right, let's go ahead and pass the mic on over to.
I miss when we used to be able to play.
Yeah.
You know, I used to play a few songs every morning, and then we started hearing about other accounts getting like banned for it. So now we only play non-copyright music, which definitely limits what we're able to play. But that's all right. I think we could throw in a little 10-second clip. Hopefully, we don't get all of our accounts. Everybody here, everybody in the audience, you're all banned.
Good times. All right. Yeah, we'll be fine. Let's go ahead and pass the mic on over to Poldo, our friendly neighbor meme coin on Polygon.
Hey, how's it going? Yeah, we're a new meme coin on Polygon. We're with a little twist here. We're bringing in some meme coin utilities to kind of help build out the ecosystem here. We come from a multitude of different chains the team does, and we see the opportunity on Polygon. So we launched a couple weeks ago, and now we're slowly starting to release our tools here to help build this ecosystem for the new investors to come on the Polygon first time, but also stay on Polygon. So we just came out with a cross-chain swap, and then we got 5 more utilities coming in the next 2 weeks that you can follow our Twitter and see about. We're also doing a giveaway here. I'll post it right here on our page for 5 users. If they like and retweet our tweet and show that they were on the thing, on the spaces, they could win $100 worth of Poldo supply.
Very nice. There we go, guys.
Opportunity on Polygon. I like to hear that. That's what I've been seeing for almost 5 years now. So
Yeah, and now I think the airdrop season is just kicking off as well. So good times. Yeah, thank you, Poldo. Wait, are you a trader or a hodler?
I'm a trader, man. That's why we created this coin. Trading the shit coins is my day job. So also obviously part of projects and everything like that, but I can't get away from the trading. So that's kind of actually why we created this coin, and kind of what our thing is called Poldo Tools, is the tools so that people are used to from other chains, whether it's wallets, trending, all these different things, to bring them onto this network, so that the average Joe shitcoin trader has the ability to do what they got to do.
Good times. Fellow DJ in the house. All right, let's go ahead and pass the mic on over to Gulo. Again, my ADHD brain going here, but there's a reggaeton song, something tremendo. I don't know if you guys heard of that, but are you guys a trader or a hodler? And tell us about yourself. Even though I think we had you on last week, but it's always great to have you back. Kulo team, are you there?
Hey, if Kulo's rugging really fast, let me just really say a couple words, because I saw the Kulo team. Word on the street is they can be spied in the streets of Miami right now, hand delivering the iPad giveaway that they conducted for their community. So they're doing that in plain sight.
Oh, very cool.
Can actually see it. Yeah. So when they commit to doing a giveaway, a community oriented giveaway, they that's how strongly they felt about it. They actually wanted to do that in person. Oh, they're there.
Smack that Kulo, baby. Let's go.
There it is.
Man, I love Google, bro. How am I able to find like the lyrics of a song you're referencing? I didn't even know what you were referencing, man.
Yeah. Yep. Yep.
The modern
time.
internet, boys and girls.
Yeah, that's my brain every day, man. It's just like it's spitting a million different things at a time. But good times. That's probably why I like stutter sometimes and like kind of like slur. I promise I'm not drunk. It's just ADHD. But let's go ahead and pass the mic on over to DFX Finance. Trader or hodler?
Yo. Hey, how's it going, everyone? Cody here. Shout out to everyone in the spaces. Shout out to the speakers. Shout out to Darren as well for organizing this. I would say on an individual level, I am a hodler and a meme coin degenerate. Also compounding into LPs to get that BTC at the end of the day. So mutual among the speakers. Outside of that, from a protocol standpoint, I'd say more trading, because we are the leading decentralized Forex protocol on Ethereum, Polygon, and Arbitrum. We currently support 11 different fiat-backed stablecoins, all paired with USDC. And that's pretty much it. Thanks for having me.
Good times. Great to have you. Is this your first time on the show?
Yes, sir, it is.
Awesome. Well, welcome. Yeah. So we have one more person to introduce here, but so you guys know, anyone new to the show, once we jump into the questions are for everyone, and you don't have to raise your hand. You just jump in whenever you see fit. But let's go ahead and pass the mic on over to Taylor Harris from DAppOS.
Hi, what's up, everyone? Yeah, I'm Taylor. I guess to answer the first question, I'm more of a hodler. As much as I'd want to be a trader, I respect the hustle of it and everything. I'd say I'm more of a hodler just because based on experience. So I'm happy to be here today just so that I can learn more, right? Just learn more about trading from a lot of you guys. But I'm here speaking on behalf of DAppOS. So DAppOS is an intent-centric operating protocol. And I think, speaking on behalf of DAppOS, we're more of, we're so much for trading because there's a lot of integrations and collaborations that we've done to where we help the users, get into trading by, for example, like with our QuickSwap integration, right? So I definitely pro trading at DAppOS. As for myself, hodler. So happy to be here.
Can you explain to people what DAppOS does a little bit more and what intent-centric trading is?
Yeah, for sure. So I kind of like to look at it as this way. So we're not like we're not a DEX in ourselves, right? So I'm not here to say like, oh, hop on DAppOS. But basically what we are is, we're a protocol that's been able to integrate and collaborate with some great, dApps. And what we do is we go about this by intent centric, which is giving the users the wanted end goal, right? It's like the desired end goal. So basically making that experience less complicated. And we've been able to integrate, for example, QuickSwap, right? So we know that QuickSwap is built around the Polygon network, or I'll hear today, hence the title, all roads lead to Polygon. But basically through this integration, the users are able to access a variety of chains using DAppOS unified account. So for example, if you go onto DAppOS and DAppOS or QuickSwap powered by DAppOS, whether you're a Polygon user, Arbitrum, Binance Smart Chain, you're able to access all of those in one. So it's kind of like broadening the options for a new user, and kind of, so it's more of like a user experience, right? So we're trying to get new users by opening up, more options. And we do love Polygon. Polygon's our friend, but maybe, some new users, they're not used to it. So opening that up, giving more options is kind of what we're going for.
Good times. Yeah, thank you for that, Taylor. We can go ahead and probably just jump into the questions now. Again, remember we have the disclaimer at the top of the space. And, I'm actually going to go with a non-scripted question here. It just, I heard everyone on the panel talking about trading and taking profits, bringing them back into Bitcoin, more sats. But do you think this might ever change? Do you think that we might ever hear people saying, because like traditionally people are saying to bring their profits back into Bitcoin or stables? That's what I hear most of the time. But do you think in the future, for some reason, and what would that reason be, that traders might start bringing those profits back into something like Monero or potentially Ethereum? Anyone can take this question.
Or
So
Polygon.
all your opinion. Yeah, or
I think
Polygon.
I'll jump in just real quick. I have a simple answer. It's just I've always kind of had my blue chips that are my main kind of hodls, my main focus, and that in 2015 that was just Bitcoin, and I thought, because a lot of my maxi friends, would tell me that everything else is a scam, so I thought, Ether was a scam. I didn't participate in the ICO. I finally then, like in 2016, said, okay, maybe I should look at this. I think I first got ETH later than a lot of my friends, but still early, like $13. Then in 2017, my top three was Bitcoin, ETH, and Litecoin. And then over time, Litecoin fell out for me, and it became Bitcoin, ETH, and Matic as my blue chips. And that pretty much, that still stands today. Those are my blue chips. There's really, I can't think of anything else that I would, if I were to take profit, hold it in. I mean, obviously, I'm a co-founder of QuickSwap, and I do buy, quite a bit of Quick with my own money, just because I love Quick, and I can't talk about the price of that, obviously, so I'll stop there. But yeah.
I think it goes back to what you were saying, though. It's all individual strategy, So at the end of the day, it's kind of like, what do you think is going to, be the future, or what's created that you just want to take part in. So it all comes down to individual level, I guess.
I think that everything is a trade. It's a trade-off, right? It's a trade-off. So you make a trade-off between, US dollars and Bitcoin. That's nice. But when, for some reason there is a better trade, whenever that might be, right? So don't marry Bitcoin either. Now it looks great, but what if, right? In 10 years, 20 years, God knows, you find something even better, some alien rock or something, by the way, rock, yeah, which is even more seldom than Bitcoin, then fine, then trade it for that. But I think,
Don't tell them, bro. Shh.
yeah, exactly. But you know what I mean? Like, so now Bitcoin seems to be a great, asset to be in because it's finite and so on, but it's always a trade-off, right? So don't marry Bitcoin either. Just stay open-minded, right? So now it makes sense. Everyone talks about the same thing, and it kind of seems to be good. But also Ethereum is quite interesting as a as an asset to go into. Not only because it gets an ETF maybe this year, and people will have the narrative floating around them, but also because it is deflationary. It gives you yield, right, which Bitcoin doesn't. And actually, Bitcoin is inflationary still, okay, until mining is done. So it depends on the trade-off, and because we never really know exactly for sure 100%, we spread our funds across multiple assets that we believe in, right? So you need to do a bit of research to understand the assets, because you're not gonna ape in with a lot of money into something you don't understand, but you can ape in with a little money into shit coins. That's fine. That's casino, right? But so for me, it's a trade-off, right? So, and definitely dollars or euros are shit coins, right? So I love to trade them for cryptos that make more sense for me, monetary speaking.
Isn't it funny that in
Like, I
reality,
think,
like dollars are, I mean, compared to everything on the market, like I said, Bitcoin, ETH, and Matic as blue chips. What I mean by that is not, I mean, there's actually lots of things I would probably consider blue chips, right? Like even Doge, I consider a blue chip. There's plenty of things I would even consider Litecoin still a blue chip. Maybe Atom from Cosmos, Monero. There's a bunch of Optimism, Arbitrum, Chainlink. There's a bunch of blue chips, but when I said blue chips earlier, I'm talking about these are the things that I know that I could trust. These are the things that I would say to my mother or father, like, yeah, you can buy that and just put it away and don't worry about it. It's a long term hold. But isn't it funny how it is very funny, I think, and I will take a moment to talk a little trash and poke people here a little bit, but during the bull runs, everyone is like, you know, putting their money in everything, and like, you know, everybody considers a lot more stuff kind of blue chips or safe long-term holds or all this, and then, you know, I'm always like, well, guys, don't forget, just hold a little bit of Bitcoin, because I have a lot of friends that are very smart in this space that hold, you know, no Bitcoin, or they're like just going all in on a bunch of altcoins, like lower down the list, and then I'm like, okay, hold some Bitcoin. And now that Bitcoin has been holding for, you know, so well throughout the bear market, has done so well lately, you got a lot more people on stage here talking about, you know, Bitcoin is the thing you should hold. It is very interesting to me.
Yeah, people, I was talking to my dad the other day as well. It's kind of like, people don't really look at Bitcoin as kind of like, I mean, you could look at it as the intro to get involved with cryptocurrencies, but it's kind of like that's the end of the day currency that you would actually use as a currency. Everything else is kind of more of, I don't know, just an access token, right? You use Ethereum because it houses, how many protocols across multiple blockchains, right? And so I think
Over
that
hundreds of thousands, right? I mean, think about
exactly.
Polygon. It has, like 6 months ago, so I'm sure it's a lot more now, has 57,000 applications just on its POS chain, and now it'll have hundreds or thousands of chains that can multiply by that number. Right now, I think it's, 10 or 20 chains, and then you've got, Arbitrum, Optimism, which have their hundreds or thousands of chains on top of Ethereum. So yeah, Ethereum's got to have, I mean, if I had to guess, 500,000 between its L1 and all its L2s. Yeah, sorry, I had to jump in there. Yeah.
No, you're good, and I
like,
think that
I
you're
think it's,
absolutely right.
I think it's
Hey,
always
real
important to
quick.
see who is.
Oh, yeah, go ahead, bro. You already started. Well, actually, let me just shout out that Narb is on the panel. I just want to say we'll try
Narb.
to Narb, jump in,
What's up?
introduce
What's
yourself
up, guys?
after, real quick, just real quick.
What's up,
So,
everyone? Long time no speak. Glad to be here. Thanks for inviting me on. For those who don't know, I am Narb, and right when I jumped on, I heard a lot of people talking about trading, and a lot of you may see that my name is Narb Trading on here, and I actually don't. I've never really talked about this, but the reason my name is Narb Trading is because originally I was a trader in the Forex market. So I started, and I still do trade in the Forex market, but just not as much as I used to, because anybody that works in crypto full time knows that crypto is basically a 24/7 job, and you really don't have time for a lot of other activities. So I still do trade in the Forex market now, but more of a long term or swing trader. But I really got started in the Forex market in 2018, 2019, even before I got like all into crypto. So I started to get into crypto during the 2018, 2019 bear market after I bought the top of Bitcoin in 2017. And I started trading Forex during that time as well. So I actually like originally was a Forex trader before anything else. And that's why my name is Narb Trading. But then, of course, I started to look into crypto. I got more involved in it, and I sort of fell in love with the tech, fell in love with the community, fell in love with the entire vision of what crypto is. And then basically I started to work in crypto full time and put the Forex thing a little bit more to the side. So I guess now what I do with my profits from Forex is I actually trade Forex and move my profits into the crypto market, which, Bitcoin, some altcoins as well. Obviously, Matic, Pull. I put a lot of my profits into that, of course.
So
Yeah,
trading shit coins to get Bitcoin.
that's that. There you
Forex.
go.
Yeah.
So for me though, like I trade the Forex market, but I don't trade the crypto market because I just don't like how altcoins move. They move too quickly for me. Like for me, I don't know if anybody's familiar with Forex, but I trade mainly Euro USD, which is, you know, two currency pairs matched together. And it moves, it doesn't move nearly as crazy as crypto does. And that's sort of how I like it. Crypto is very volatile, and I just don't like the way that it moves. It doesn't feel as structured. It feels more random to me. So that's why I prefer Forex.
Now, I have
So
a question. If you
go
come
ahead.
from if you come from Forex, don't you use a massive amount of leverage?
That's
Yeah,
what my question was going to be too.
so I actually trade using prop firms. So for anybody who's not familiar with prop firms, basically you have to pass these evaluations. So you pay a fee up front. Let's say you're going to purchase a evaluation for a $100,000 of capital. You have these certain rules that you have to follow. Yes, there is a lot of leverage in the Forex market, but basically when you have to pass these evaluations to start with, to begin to trade with these, with the capital of these prop firms. And it's like, you know, I can only risk this amount of percent per day. Like they're obviously very protective of their capital. But the way that I do it is I have, you know, many of these prop firms, and I trade for many of these prop firms, and that way I'm not risking my own capital. So I'm not risking my, you know, I'm not going full on leverage with my own capital is what I'm trying to say.
Very nice. Narb, it's always great to have you here, and you're a Polygon OG. I want to pick your brain a little bit more, but I know MC Squared Phi was going to jump in before I don't like people to sit on the stage for too long without introducing them, so I had to introduce you. But let's go ahead and MC Squared Phi, do you want to piggyback off something that was said previously?
Sure, happy to. What I wanted to say is typically I look at the reference token. Like in the traditional finance with fiat currency, it's dollars, so a lot of the market moves according to how the dollar is moving. And in the crypto space, this is just Bitcoin. Like all the market movement and all the yield that is coming basically out of the crypto space, like until now, it definitely is like probably 95, 99%. It comes out of actually VC dollars going into the space and then protocols giving it out as yield. And so for sure, the reference is always Bitcoin. So that's kind of the thing that is valuable. What do you need to do to break out of it as a token? You need to create your own ecosystem that has a different source of yield that is as strong as the main currency that you're referencing with. And currently, I think the usability of the whole crypto space, the simplicity of using it is still like so horrible and so bad that there is no mass market. And that means all the reference that you have is Bitcoin. And that's why my strategy is like holding Bitcoin and trading everything else, because like to break out the whole market still needs to become a much simpler, easier, and then you have a chance of a token breaking out of Bitcoin.
So my question to you then, based off what you said. So initially, I'm asking here, do you think that could change? Would you see someone or not even the majority, but just a larger percentage of people start taking profits into something like Monero or Ethereum, and why? Let me ask you this then, MC Squared, based on what you're saying, like, let's say Ethereum gets an ETF, it starts getting some institutional traction, starts becoming a little less volatile, much larger market cap. Do you think that people would gravitate more towards taking profits into Ethereum, or is there a hole in that theory?
I think it's nice from a trading point of view where you say, great, Ethereum can be traded with more traditional finance. But what market really moves is when you start to access the mass market, and the whole crypto space still is not there. Like one thing that I always say is, as long as a user has to care what blockchain you are on, it will not be mass market ready. Only when you can use any protocol you like, but you don't need to care about blockchains anymore, we will be starting to get ready. And so I think that it's a big cornerstone that the crypto space becomes much easier tradable in traditional finance instruments. It gives us access to much more great capital, but it's an extension of the capital we already got to build things. And we are still not there to build for mass market users. And only when this is happening, when the first protocols understand how to really do that, I think we will start see tokens breaking out. And if these are protocols built on Ethereum, then Ethereum will break out. But as long as kind of it's just out of investment money to build a future, we will always be referenced on what is Bitcoin.
If I may, guys, here, because I'm actually apologies for jumping in and out. I keep losing the feed. I didn't hear everyone speak, but I think it's I think just to answer the question, I suppose, to the point, it's possible, but I'm 100% with what MC was just saying. We're far away from it, but my belief is, and that's pretty much why I trade so much, is diversification outside of crypto and within crypto, across different assets, not just Bitcoin, Ethereum. And don't shoot me here, but I do think if you don't have a bag of XRP, you are not gonna make it. And someone here was actually talking about not trading crypto. I understand that it's not for everyone, but I believe that in this time and day, it's the biggest blessing to be able to extract from a market that moves so fast. It's not going to be here forever. This opportunity has a window that's going to close. And I know we are talking about EDFs and mass adoption and all that, but I think with that, we are going to definitely lose not only the volatility, but also the amount of assets we can right now currently trade. And it's it's just this opportunity, and that's probably why I also love doing it right now, knowing that I am extremely lucky to be able to have this right in front of me and extract from the market. Now, like I said, it's not for everyone, and you know, if you're happy trading this either higher time frames or forex that moves slower, suits you. But personally, like I said earlier when I was introducing myself, it's in my blood, it's in my veins. It's something that makes me like really, you know, feel alive and also understand that I have this opportunity to take that money and put it in different assets. And what you know, blue chips, everyone has their own favorite picks. I personally feel like Bitcoin, Ethereum, and like I said, XRP would be my choice. Laugh all you want, but I really do feel it's the dark horse. And outside of crypto, I think in general, you know, the wealth spread should be not just within one class, but um, either you're no you're using the money that you have amassed here. Like I said, the trillions available at our fingertips right now when it comes to trading, it's a blessing. And to be able to, obviously I don't have trillions yet, God knows when, but what I'm saying is that you have that chance to take that money and then you can make your life whatever you want it to be. This is my dream anyway, guys, like, you know, um whether it's gold or real estate, or I don't know, just luxury goods that can be down the line, also, you know, my added to my portfolio.
Yeah, and
You have that.
you can front run big money, which is very seldom, if at all, that you could do that ever. Like in any asset, you can tell me if you know any assets. I fully agree with you. So if anyone doesn't get it, right, you can be in these cryptos, which big money will get into way later after you are already there and have a position, and they will pump your bags if you hold on to them long enough, or you know, if you know what you're
Yeah,
doing. So this is crazy opportunity, which I agree will not come again anytime soon. How much do we still have time? 5, 10 years or less?
I personally feel Yeah, maybe less than, definitely 10, 10 is max at this point. But it's not for everyone, but I personally feel like it's just honestly, I feel blessed. I feel seriously, I'm like, I came to crypto quite late, but I still feel I came in at the point where I still have this, I didn't come too late, that kind of way.
Yeah, people get mad at me. Don't worry, because people get mad at me when I say it. Like earlier, I came a bit late to Ethereum at $13. And later on, you may feel like you're late now, but in 5 years, people will be, pissed off at you for saying you came late.
Hey, Rock, I love that you brought that up also, because this is, so when we talk about like trading versus hodling too, I think you just completely laid out the entire purpose for trying to get into projects early and be that fundamental hodler, that fundamental investor who does hodl and looks for fundamentally strong projects. Ethereum at $13 is only relevant because Ethereum is relevant today, right? So there are plenty of networks that launched, and Ethereum Classic, right, unfortunately suffered during that same time frame. Yes, you would have been fine hitching your wagon to Ethereum Classic Star. Your portfolio would have been okay at that same time frame, but not quite as strong as having Ethereum, right? Not Ethereum Classic, even though it's the original chain, right? So again, you have to be careful between fundamental value of the fundamental value because of utility, and then also what the market is actively choosing, because the market doesn't always choose what's best. The market chooses what it chooses, right? And it has all kinds of reasons. And that confluence of factors between the cultural, like, hey, why does the market want this, versus fundamentally this one over here is better and stands a real shot, right, at overtaking maybe some other tech down the line. And we've seen in small ways how that's been the case, how there have been room for additional entrants into the smart contracting space. It isn't just Ethereum's game, but it's also like, it's now borne out that there's no such thing as an Ethereum killer either, right? So we don't even hear that anymore. But I wanted to just throw that out there, that like, when you mention getting exposure to Ethereum at $13, again, that is the play. And just adding to what Marta is saying, and Michael, with those timeframes, I agree very much that that in those timeframes, we're going to see most of the infrastructure necessary. And I'm not talking about DePIN projects. I'm talking about just the core baseline blockchain rails that we're going to use to send smart contracts and tokens, tokenized assets on top of. A lot of that, including in the GameFi space and the other areas where we're innovating still, the room for innovation in the layer ones and just in the blockchain, the finality of writing all these transactions to a blockchain, a lot of that story is going to be told in that time. And I think that's why that window is closing, because everything else will be sort of subtle optimizations. It won't be the large gross movements that lay the true foundation of what blockchain will be. It's just like, okay, now we're like changing road signs and stuff, but the roads, the highways and all that, we've already decided where they're going to go, right? The rails, we've already decided which mountain we're going to blast a giant hole in the side of to get these rails going through it. That's the blockchain. That will all be done, I think, largely speaking. And then after that point, with some of the optimizations in AI and some of the other elements that move really fast and are self-healing, like different types of encryption, that will we won't even be able to tell the difference. The tech will be so far beyond us. Most people to do fundamental analysis and figure out, does this make sense? That yeah, we'll also have that problem, right? But deep fakes, mass decryption because of quantum computing, all these other disruptive black swan possible threats, those also lie at the end of that 5 to 10 year window, I think. So it'll be interesting. I agree with Marta. Get the bag now on early investment. In my opinion, early investment, not advice, but my take is I just want to get to good projects early, and then I want to take profits carefully, right, and respectfully to those projects so I don't disrupt them. But yeah, I love that you brought that up. That is a way to get massive alpha.
Man, I have to add something. And then we have to go to DFX because I think you had your hands up and so on. But please let me add something. It's perfect. So when you said you got Ethereum for whatever price, super low price, that's relevant because now it's higher. But if you come here and say, hey, I bought some shitcoin at $1, but now it's at 0.000001, nobody brags about that. Like nobody comes on stage here and says, "Ooh, I bought it at $1. I'm so cool," because now it's worthless, right? Which is bringing me back to the question at the beginning, why I am a trader and not marrying any asset. Because what if there is a sell signal, even on Ethereum, it can go to zero, not now, but you know, any asset that you get into, you're super bullish on. And yes, Ethereum turned out great, but what if you come here and say, hey, what about all the other investments that went to zero or almost zero? Nobody brags about those because you didn't have a sell signal, you didn't know when to get out. So keep in mind that yes, you can brag about the ones that made it, but what about the ones that didn't make it? Could you have gotten out earlier instead of hodling them because you were super bullish on, right? What about having a strategy to just get out there and put it in something better, right? It's a trade-off between, you know, which asset is better at a certain point in time. So just because we talk about trading today, right? That's super important information, I believe. Or like keep in mind, okay, don't marry any investment, whichever investment it is, because it might otherwise go down. So yes, great job with Ethereum, but take care and not stay in an investment forever. Yeah, DFX. If
I'm saying
Yeah.
Bitcoin, ETH, and Matic, and
Cool.
maybe Doge, maybe like these pretty much almost everything I buy, I stand for. I'm totally opposite of a trader. I just only buy things I actually really like or believe in, and then I just sit on them. Like I don't think I've ever sold an
Even if you
NFT.
don't
If
use
I buy
your,
an NFT, it's because I like the community, and I feel like selling it would be kind of betraying that community. So I buy things and I hodl forever, and I get bit in the ass for that, by the way. So you know, maybe it's not for everyone, but
Sure.
I just don't take shit.
It's a surefire way to watch your portfolio go whichever direction the market's going. Obviously, if you overcommit, that's literally what Michael is talking about. I think when marrying your bags. Let me offer one last quick comment.
I'm very married to all of my bags.
Yeah, and another thing, just to drop this in there, another thing is that you know there are many trader-like perspectives here. So for the audience to know, you know, and there's so many different ways to that you could handle, you know, your own bags and stuff. But
Good
yeah,
to
we
have
are kind of
both perspectives.
Let me quickly offer one last
Hey,
comment
Seth,
before
right after you, bro.
Yeah.
Yeah, right after you said, let's pass the mic on over to DFX because I know he had his hand up a little while ago, so I just wanted to piggyback. But yeah, after you.
I apologize. I didn't even look for hands because you said to just jump off of mute. So
Yeah, for sure.
let me quickly comment that when you're talking about holding something like that also, and you know the hold versus trade, I think a valuable exercise for anybody is just to run just pay attention to the value of your asset, not in USD, but relative to some of the other, like you were saying, blue chips, Rock. If you are a fan of Matic, if you're a fan of ETH, if you're a fan of Bitcoin, then make sure you're always at least checking, right, with your views on your portfolio or on trading, whatever. Always make sure that you're comparing it against the price action of Bitcoin, because it does beg the question, if you've been holding for a number of years, how do these other assets do? Would I have done better dollar cost averaging? Because in many cases, for most new investors and most new traders, it's just better to DCA, hodl, and don't try to be clever. Just make sure that you don't lose money. Anyway, wanted to offer that. Thank you again for the time.
That's a really good
thanks
point.
thanks for letting me jump back on here on this. I wanted to touch on like kind of multiple topics, kind of like what MC was saying with the ease of access between multiple blockchains. I think, you know, you have multiple different types of either traders, holders, or just speculators in general. What I admire deeply about the NFT market
Same
is
thing like with the US stock indexes. For the last 30 years, the best way was just to hold an ETF of some of the main indices instead of trading single stocks.
Can anyone hear me? Sorry.
Yep, we can hear both of you.
Okay, gotcha. I just didn't want to talk over. I'm sorry about that. But yeah, one thing I wanted to say about especially the NFT market and kind of going towards ease of access towards education as well is they went from taking art and then slowly moving to adding the price to it, adding the educational piece to it, whether it became staking an NFT, earning this token, governing a protocol, etc. That's where, you know, I think Solana did something good, was actually bringing NFT, adapting a community before they had actually started to get more of the tech side of it involved, right? They made it simplistic. It was easy, right? Another thing I wanted to add was with, you know, when people intro or come into the market, when I came in like early 2017, was no, if someone told me Dogecoin was going to go to 40 cents or whatever it went up to, I would have said, you're crazy, right? And the time for people like, you know, either Elon Musk saying, hey, you know, buy Doge, or companies coming out like Walmart and saying, or partnering with Walden Chain, whatever the case is, that really doesn't have the same effect anymore. So the strategy has changed, but also when the average, I know just, you know, in the United States, the average American, you know, whether it be male, female, that's a everyday 9 to 5 worker trying to get involved, doesn't want to understand the complexities. And what they will do, from what I have saw, is they will speculate on the perception of a bigger cap with whatever market cap, because they're not looking at the market cap. They're looking at, okay, I can buy, I don't know, a million bonk for $50. That sounds like a great deal. And if it hits $1, I'm going to be rich. And it's like, yeah, that, no, yeah, no, you know what I'm saying? Because I think that there's an educational gap within there. And I think that that's should be the main focus, is user interface, being able to educate people and onboarding them before we speculate on anything, right? But the best way is to have them speculate on something, to look at how to get involved, because you're looking at the incentive of what could be. And so it's like a multifaceted issue that is, it's hard to net together, right? And I think that's what's great about, you know, whether you're on any blockchain, as long as you're participating, like everyone on the panel, everyone in the crowd, everyone that's here is trying to learn more. They're trying to understand what will happen, right? And when will everyone else see this happening, right? So whether or not you want to look at price, look at the actual underlying tech that is being built. You're looking at the Microsofts, you're looking at NVIDIAs, you're looking at Intels, right? Just because they're not named the same doesn't mean they're not there. So pay attention to what blockchain can really solve throughout, you know, the real world, and you will find something that is either quote unquote gem or whatever the case is.
I
Yeah,
love it. Here, let me switch it up. Michael, were you gonna say something? Let me throw this question to you then, Michael. Because I just want to switch it up a bit. So, how important is technical analysis versus fundamental analysis in your decision-making process, and how do you find a balance between the two? Just to kind of let everyone know, you know, the technical side of it, you know, that's the TA, that's the lines and the patterns, and that fundamental analysis is kind of what Shitcoin Shaman was talking about, you know, looking deeper into the technology and you know how they're progressing and things like that. So Michael, take it away. Let me know what you think there.
yeah. I mean, thank you. The question is great because I think everyone has a lot to say to this. The thing is that there are two worlds, right, to this, because there are people that swear that technical analysis and just looking at the chart is good enough. You don't need to do anything else because the chart is the truth, right? You cannot hide what you're doing in the chart. If you're buying, the price goes up, you're selling, price goes down. You see exactly what people are doing, whereas they go online and talk in the news about how bad Bitcoin is and it's for scammers. And in the background, they're planning an ETF, right? So so news is bad, okay? I can tell you that already. Chart is truth, but then fundamental analysis of the project that you're buying, I mean, it can help, obviously, but there are really two types of people. Some people swear that they look at the fundamentals and that's it. They don't care about the chart. They hold longer, right? And they become like real advocates and they love the project and they stay in. And while that has an emotional effect, an aspect of it, I don't like emotions when it comes to making money. It's not working. It's usually producing losses. And whoever is a trader here might know what I'm talking about. So if you wanna like, if you really like a project, fine. Like nobody will say don't buy it, right? But if you want to make sure that you're doing it with a strategy and you have some plan, then definitely I'm more on the chart side, because the chart, like I say, is the truth. The chart patterns, even if it looks like, you know, you're looking into a magic ball, It's not that, because it's like the chart patterns show you emotions of people, right? And you can kind of see how people are, what the sentiment is in the chart if you know how to read it. It's like a book, basically. But combining it with the fundamentals of, let's say, Ethereum being deflationary and so on, it helps to stick around during a downturn, right? The price goes down, you feel negative, but then you remember, wait a minute, Ethereum is great. Why I don't sell it now? It's, look, I remember the fundamentals are awesome, so let's stay in. So it gives you more confidence to actually stick around. So I think the combination is good, but still I believe that everyone will choose one or the other side more. So I choose the chart, right? And I take the fundamentals as like, emotional,
That's kind of funny, man.
comfort.
That's an interesting way to look at it. I would I don't know if I disagree. I would say, like, you tell me. You know me actually pretty well, Michael. And actually, you mentioned about Bitcoin inflation and ETH deflation and stuff. I know we had a call like the night before last for like an hour, and we talked about that briefly. But so you know me, I think, relatively well. When I say that I buy something I believe in, and I really do kind of trade with my heart. Now, I don't know that I would say I'm trading with emotions or I'm buying things out of emotion, but when I say my heart, I'm saying kind of my heart, my brain, this is what I believe in, right? I believe it. Like, all of my best trades really were things I believed in. They were not things where I was like, oh, I think X token, I don't really like what they're doing, but I'm going to buy it anyways because, like, I see everybody else is buying it and it's probably a good trade. I never, ever buy shit like that. Never. I buy stuff because I go, okay, this is a cool tech I believe in. I believe in, the community. I believe in the messaging of the leadership. I believe in if it has leadership. And I really follow my heart, I think I would say. Does that conflict with what you're saying? Am I stupid? But I mean,
No,
like, for me, it's been
I mean, but
Tesla,
like
no,
it's been
you're awesome.
Bitcoin, it's been Ethereum, Matic.
we would
No,
have
So
to
let me
ask
answer this
ourselves.
quickly, because he was kind of referring to us. So I think you're great, man. Like, honestly, every project would love to have investors like you, okay, that actually like come with this belief and heart and like sticking around and never selling and stuff. Obviously, right? I'm just saying that if you marry an asset, and that's fine, you can do that, but don't do it with all your assets, because what if they all go down? You forget to sell because you love all of them. It doesn't make sense. So I think you're smart, but you have a different situation. You have this and that amount of money on your account. You might never have to work again. Blah blah blah. So it really depends on what kind of person you are around here, and then you can make different kind of decisions. And I don't know how much money you invest in these projects that you fall in love with. Do you invest like 1% of your portfolio or 50%? You see what I mean?
I
So
mean, the
yeah.
ones all of them combined. I mean, I'm all in crypto.
But like, we have to ask ourselves here, guys, what are we considering trading? Because at the end of the day, when you buy something because it's cheap and you believe in it, and then you sell it tomorrow because the price went up, you have already, you've traded. This was a trade, but does that make you a trader? So there are, I think, layers to this here. And when you were talking about fundamentals and trading based on fundamentals, that's a different type of trading than trading with leverage, or even spot trading. You're looking at at technical analysis. There are obviously, like I said, there are different types of traders and different types of trading. So I think there is also that difference we have to think about. But 100% what Michael, I definitely resonate there with the feelings and stuff. When people decide on I want to invest in this and that because of the fundamentals. A trader like me personally, I rarely look at fundamentals. What I care about is technical analysis. I don't even need to know the name of the asset. All I have is in front of me on that chart, and all I care about is that it is has sufficient liquidity for me to take the money from that asset. And I'm in it for just for that. I don't care what it is, how much you love it. constantly get hate for, especially when something is trending at the time, and I come out with my personal view on this because of technical analysis, and you get backlash. Why are you saying this is going to go down? I actually, you can look back on, you can do a search on CAS, where I did put in on the chart the next level where it would make sense for me to ever come back into it with a good RR. And people were getting hurt by it. And there's many projects like that, and people getting in with their feelings based on fundamentals, believing in it, heart and head in it, and taking out their emotions on a trader. I sincerely, with love, do not care about the project when I trade. When I buy and hold, and I have projects I buy and hold, but the fundamental question for me was, who am I? I consider myself a trader. But I have projects I will invest in and hold, and like you, Rock, there are an NFTs and projects I bought and never sold because I believe in them or love them or whatever, and it's like, yeah, they're staying there. I don't care whatever happens to them. But at the end of the day, I'm here to make money. And I'm not going to make money if I have sentimental value for, everything that I buy and never sell. I'm a trader. And just back to, fundamentals versus technical. To me, only technical when it comes to trading.
Yeah, Marta, I think that when people hear you talk, some people, you're going to trigger some people because not everyone is a trader. You're explaining that you have no emotion and you're going about this like a trader, which is great, if you're a trader. And I also like how you said, fundamentally, you're a trader. I think that's so important, just to kind of maybe throw a little education here. It's so important to hear when someone knows what they are, because I think a lot of people join this space for a million different reasons, and no one told them they should probably figure out what they are. You got people trying to be traders, but they're not traders. They're probably, maybe because of their proficiency and understanding, they would better just be a hodler at the beginning, or maybe they can learn to be a trader later, but right now they're better suited to be just a long-term investor, short-term, something along those lines. So really understand. I love what you said, Marta, because you know who you are. I also love Rox, because he's been saying this for years, so I'm bringing him up. But he knows he's a hodler, and so for everyone in the audience, I think it's really important. And the reason why we started at the beginning of this episode, what are you, trader or hodler? That's really oversimplifying it, because there's a million different types of traders. There's a bunch of different types of hodlers. You could be for trading, you could be a high frequency trader, you could be a scalper, you could be a swing trader, et cetera, et cetera. Same thing with investing and being like a hodler. There's all kinds of different categories. But what I like about what many people are saying here is that Michael also he knows he's a trader, but I also think Michael kind of definitely swings into a couple different categories, because he's picked up these proficiencies and he feels comfortable in these different categories. But yeah, I like. I want to take a little second here for the audience, for everyone. Narb here again. He also said, he knows what he likes. He likes the Forex. And I think that's so important to figure out. One of the first questions you should ask yourself is, what am I? What am I best suited for? Like, can I control my emotions? These kind of things. I do want to pass the mic to Narb, though, with like Forex and all this. The last question I asked for everyone here at the panel was, how do you balance between fundamental analysis and technical analysis? So I'm wondering, because I don't know, I can read charts, very amazing. I've never jumped into Forex though, specifically. Are you doing a lot of fundamental analysis there, or what's your take? How do you balance yourself between the technical and the fundamental analysis?
Yeah, for me, it's a little bit of both because, like I said, I trade Euro USD. So a lot of the times I'm watching the DXY, which is the dollar index. And so I'm basically paying attention to what the dollar is doing compared to what the euro is doing. But intraday, meaning like if I am doing a shorter time frame, I'm doing a lot more technical analysis. So I would say fundamentally, I'm looking at more of the the higher time frame, the long term vision of where things are heading. But when I'm actually getting into a trade, if I'm doing more of a short term trade, I'm looking at the technicals, and I have my own little very simple strategy that works decently well for me, at least at this time. The market's always evolving, so sometimes I have to change things up. But like I said, I don't trade nearly as much as I used to anyway. And my main strategy is, taking what profits that I make from Forex and then putting it into the crypto market.
I wonder because keeps coming up in my mind when we're talking. Who here for the traders? Are you trading spot? Are you trading leverage? Are you trading high leverage on the forex, on the crypto? What do you guys? What's your guys' leverage take?
I'll jump in real quick because I will have to get off real soon. I did say I will be able to only stay for the first hour, even though this is my favorite topic, guys. I would love to stay for the whole spaces at least for once. Leverage, and it can be high leverage. And I see this a lot of the times where people will be, looking at a trade. Let's say if I take and the leverage is high, my skills have been really working, very, very hard over the years to get to where I am at right now. I've recently totally changed my game. High leverage. Anyway, just let's start from the fact that I do think leverage is the best thing that has ever happened to trading. But it's not for everybody. 100%, and we did have the disclaimer at the start. But leverage will depend on my risk and on the stop loss. Usually, I try not have bigger stop losses than 3%, and that will mean I'm risking about 30% of the trade for my loss going in at 10x. But that is always evaluated based on the setup, timeline, time frame, and obviously market conditions, because we need to take that into consideration. So yeah, I love trading with leverage, and I love scalping. Even though the best, and this is actually financial advice, guys, if you ever want to trade, look at higher time frames. This is where the best money is made, and this is nearly I wouldn't say 100% win rate, but higher chances of you actually getting in at the right time than riding the trend and selling with profit, rather than guessing at a small time frame and jumping in at a 1 minute time frame with 100x and thinking you're going to become a millionaire within one trade, or so that's me. And if I jump off without saying goodbye, I apologize, but I'm going to stay here and let's definitely listen to the rest of you guys. And if you ever have any questions, because I feel like I am myself, I think shitcoin shaman, potentially Michael, we are the high risk adrenaline trading people. I'm more than happy to answer. I have free Discord where I hang out with my community, and I love getting into those conversations with everyone, and that's why I love these spaces as well.
Varda, let's
Yes,
actually we have to talk. We have to talk. I will DM you. Please accept my DMs.
will do. Okay.
Yeah, it seems we have a lot in common, and we should definitely share some knowledge.
Awesome. Yeah, floor is yours, guys. I'm sorry I jumped in like that, but I will most likely have to leave soon. Love being here.
It's great always having you here, Marta. I got rugged there at the end of Narb's explanation, so I didn't get to follow up, but no worries. Shitcoin's jamming. You got your hand up, brother.
Yeah, yeah. I'm pretty much right there with Marta. I mean, I love leverage, trading with leverage. Not necessarily because it's high risk. I feel like it's kind of misconstrued that way. A lot of people see the number 100x 150x for your leverage and think it means you're being a total maniac, but in reality leverage is designed to keep your risk low, where you're able to represent a significant portion of your portfolio with far less capital on the centralized exchange. So right there you're eliminating some counterparty risk, just by not having to put as much stuff on a third party exchange, right? And then it's just a matter of you're able to. It cuts both ways. So there is risk, but you you are able to control your risk with your stop losses and whatever. So you can have some super high leverage position, but your stop is tight. So the actual risk is 1 or 2% of your account, but your potential upside, if you're right, is amplified. So it's definitely my preferred method of trading. But just like Marta said, I mean, you have to every time frame matters, right? You can use the 1 minute chart to sort of help with your timing, but you have to start zoomed out, have the context to look at that within. You know what I mean? You have to be able to have a greater idea of like a sense of where you think things are going, and then you can zoom in on the lower time frames and be like, okay, so if I think we're gonna do this over the next week or two, how do I want to position myself? And then you can look at the lower time frames for like your signals. I mean, like just this morning, I took like a really quick short on Bitcoin live on my Spaces, and it was like instantly in profit. It was great. And then I was looking for a bigger move, but as soon as I started to see on lower time frames some reversal signals, I flipped long like right away. And it's you just have to be able to adjust on the fly a bit and not get married to your positions, as people keep saying,
I like that
Yeah.
you said that you start on the higher time frames, and then you sometimes zoom into the smaller time frames for like the signal or confluence or whatever you're looking for. That's
Yeah,
definitely a pro
it
move
helps
there.
in terms of it helps in terms of timing, right? Because you could look at like the 4 hour chart or the daily chart, and you have a great idea, and you can be right, but it could take a week or two to play out. So
Exactly.
like you might want to zoom in a little bit and have that context in mind, so that you're not just like sitting in an open position for a week for no reason.
Pro tips coming. We haven't
I
talked
want
to
to
Taylor.
offer.
Oh, if I could just ask Taylor this real quick. Taylor, are you there, bro?
Yeah, I'm
I
here. I'm listening.
you got a question for any of the GigaBrain traders here? I know like you're saying hey, I might be sitting here kind of learning, and I'm wondering, you've heard a lot of different things. I feel like you'd be a great person to just ask a question about trading, maybe something that has piqued your interest during the conversation, or just in general. Maybe we can
No,
answer
yeah,
it for everyone.
for sure. I'm kind of sitting in a beautiful place because I'm almost like that new kid in school who's able to just join the lunch table. I'm not a very much experienced trader myself, so I'm happy to be here and listen to what you guys are saying. I guess to bring it back to the fundamental versus technical analysis, as a new user, I myself I haven't been in the industry for a long time, so I could see myself as a new user. I would more so go into it from like the technical analysis because I could open up YouTube, I could watch, I could learn about candlesticks, I can learn how to read the charts, and whatever I have, I can put into it just based off what I learned. But I do understand in a way that um, fundamentals are important, and like everything you do, like if you don't have the fundamentals, maybe I mean the technical side of it, being able to read the charts, making those quick decisions, obviously it's worked for a lot of people, but I think the question I have is like, where does the balance come? Because I guess Marta was very much pro technical analysis, but as a new user I do understand, not just in this industry but with everything you learn, it is important to know and understand the fundamentals. So I guess the big question I have is like, where's the balance between the two, and can you have that balance, or do you have to be so much pro one or the other?
That's a good question. I'll jump on someone else if you guys feel like piggybacking. Like I think initially this kind of goes back to one of the things we were talking about earlier, where you have to figure out what you are initially. You know, if you understand you're a trader, you're probably not considering as much like the fundamentals of whatever you're trading. If you're an investor, in my opinion, especially like a long-term investor, something that hasn't really been brought up is macro, and the two that have been brought up is fundamental and technical analysis. So if I'm an investor, I'm looking at I'm looking at a chart from a more zoomed out approach, higher time frame. Then I'm looking into the technicals, or sorry, the fundamentals, and then I'm also looking at macro, just to kind of look at the wild cards. And but see, that wouldn't necessarily, you wouldn't need that as much if you were just like a short-term trader. So again, I think for me to answer that, I think you got to understand, you got to pick what you want to do, who you want to be, I guess. Michael.
Yeah, I have to add a lot of stuff to this. First of all, leverage for me, and I want to be exactly on the other side of this, what has been said between Marta and Shitcoin Sharon. I avoid leverage because that can get your portfolio destroyed. So I think if you really know what you're doing, and I'm talking about you have 5 years of experience with the charts, then fine. Yeah, you take leverage, you know what you're doing. But if you are not experienced and you use leverage, and basically that's what you read on Twitter, on YouTube. Hey, I lost all my money because I used leverage. Yeah, okay, of course. That's the whole point of tricking you into taking these risks while not understanding how big the risk is. So I don't take any leverage. As I said in the beginning, I have automated my strategies for not all coins, but for Bitcoin, Ethereum, Matic, Avalanche, and Solana. And basically, I mean, you can tell me whatever you want, like holding and hodling and all these things, but I've made 15x on Bitcoin, while Bitcoin only made 200%. Since I started trading, buying and holding Bitcoin would have given you 200. I made 15x. I'm just saying, like, so the numbers are the numbers. So you cannot like dispute the numbers, all right? So when I say trading, I mean like longer term swings, right? They can take months to play out. But if the trend breaks, I'm out. I don't care that Bitcoin is the best asset on the planet. I don't want to have 75% drawdown in the bear market. If you like that, cool, but I don't like it, right? So you have to, like Aztec said, you have to figure out who you are. You know, do you care that you have 75% less purchasing power in the real world, or do you don't like, right? If you don't like it, you need to get out somehow. You need some signal to liquidate or to sell into whatever, into dollars, because for a short amount of time, it can be a year, dollars might be better than Bitcoin, right? It's always a trade-off of which asset is more stable in a certain amount of time. And it's not like Bitcoin is always better and dollars is always bad. You know, that's kind of black and white, not very smart thinking, you know? So if your goal is to be able to buy more Teslas in the real world, then you should get out of the asset before it goes down 70% and then buy back in when there is a good trend emerging, you know? So that's why, I'm on the trader side, but I don't do leverage. That's for me, I would totally advise against it. Again, if you don't have a lot of experience with the charts.
Michael, also, I think even so this is just something I heard. I don't come from I'm a great trader because I've just studied for so long, but I do not come from a traditional background. But what I hear from a lot of professional traders, Wall Street guys, is that they use like max 3x leverage, and I think what's crazy is, in the crypto markets, there is like 50 to 100x. But I don't know. Can anyone confirm that? Is this true that a lot of professional traders, Wall Street guys, are only using very small amounts of leverage?
That's even what I do. I mean, the thing is like leverage. There's a lot of misunderstanding about what it all means. Like if you're on isolated leverage with 100x, 150x leverage, that's kind of insanity. Like you have very little wiggle room to be wrong before you get liquidated. But like I'll do the max leverage, but I'm on cross, so my actual leverage is based on the sizing relative to my account. So like it'll say when I share my P&L my P&L screenshot, it looks, it says 150x leverage, but I'm really only at effectively 2 to 3x leverage based on the sizing. So it's like it's a little bit it seems riskier than it is. But yeah, I mean, you really shouldn't be risking more than a couple percent of your whole account on a single idea. So where you get stopped out. So like the math of it is pretty simple, but it can be hard to understand at first, and it's just like widely misunderstood and also kind of glorified on like the timeline to be this degenerate thing to do, when in reality that's how you're going to get wrecked. You can use it to mitigate risk. That's really what it's designed for, to keep risk low. People kind of use it backwards and crank it up and do like their full account at 50x 100x leverage, and then they're surprised they get liquidated. You literally have like less than a percent of wiggle room against you. I mean, like, good luck if that's what you're trying to do. That's just straight gambling.
Yeah, but you know why it's actually glorified is because, and people have to really understand this. This is quite important. Exchanges, they make money on two different ways, like major revenue streams, right? One of them is trading fees, right? And so the more you trade, the more trading fees they can collect, right? So if you trade on a half an hour chart or a 5 minute chart, you will make a lot of trades, and they love that. They love you because you give them a lot of money, right? Now they will emphasize you to trade more, and so they give you trading bots they have on the platform, so that you have like the DCA bot, not the DCA bot, but the grid bot, which buys more often, sells more often. Perfect. They love it, right? That's why you have the grid bot. And leverage is the same thing. Like they make money by borrowing you money on an hourly basis. They will then charge you the fee of borrowing you whatever leverage you took, right? And then they will liquidate you if you obviously, the price goes against you. So exchanges, they have a lot of money to invest in marketing and in influencers to show you how to trade often and with leverage. That's their game, right? So if you fall for that, well, good luck for you. Okay, I advise against it. So go on higher time frames, like Marta said, and take care. Don't use any leverage if you don't understand how the leverage actually works in the background, what really happens there, and how does it affect your portfolio. Unless you understand that, don't use it, basically.
Good point. And again, to piggyback off what you're saying, Michael, figure out who you are. Are you a trader? What type of trader? Investor? What type of investor? Yeah, and if you want to go trading, maybe you paper trade first. Maybe you do a ton of research or take people say take courses and stuff. I think you can find most for free on the internet, but yep, you can streamline things by taking courses. But yeah, definitely become educated. I think this is all smart, Michael. But we have some new GIGABRAINS on the panel, so I just want to introduce everyone really quickly. Maybe ask a different question to switch things up after we introduce. So, Alex, are you a trader or a hodler?
Neither. I do what the market tells me. I don't trade specifically. I'm not here to well, traders typically run shorter term, right? So I'm a long-term investor. But I'm not a hodler because I don't have like faith or worship in any particular coin or stock or anything like that, right? I don't do any of that because that's stupid. Faith doesn't belong in your wallet. That doesn't go there. They keep trying to put it together, but it doesn't belong there, right? So what I do is follow news, and I follow fundamentals. which is very different than following price action and things like that. I could usually give a shit about price action. Because price action is really basically saying, what does everyone else think about this particular price, which is great when I think something different. Because great money comes from doing the opposite of the market. So when you find a great play where what you know is different from what everyone else knows, that's where you actually can do something great. When you do something like trying to follow the market, which is what I'm pretty sure about 99.9% of X does, all you can do is average. That's the best you can do. And that's not great. So I've done lots of spaces on this. I have a finance space that I do every week on Thursdays, and we did one recently about how dollar cost averaging is a terrible long-term investment strategy. There's a bunch of different strategies, right? But people only
Can
know what
Alex,
people. Sorry.
can you double click on that? So why do you? I don't know if there's maybe a short version of why you say DCAing, dollar cost averaging, is not good
I will tell you, I
or not
mean,
great.
very briefly, it's really just that the price that you buy at matters. It matters, right? That's the half of the equation of whether or not you're making a profit or not, right? So there's actually, this is a very old story from a Benjamin Graham book, but this has actually been studied over and over and over again. The idea that if you save, $15 a month, which at that time in like 1900 something was like a lot of money, right? But if you save X dollars a month and then put it into investing and then just automatically invest and then reinvest any dividends that come out, you will end up with, and so the money that we had here was the CEO of DuPont, right? I don't know if you guys have heard of DuPont. It's a giant company. And they said, the CEO said, if you put $15 in every month, then at the end of 20 years, you'll have $85,000, a fortune at that time. Well, it turns out that you don't predict what happens with the market very well with that. And in point of fact, if you actually put $15 in for 20 years, you'd end up with $8,500, not quite $80,000. So the money doesn't lie, actually. So the truth is, you need to watch what's happening in the market to see if something is overbought or oversold. It matters what price you're actually going to purchase in, and that's going to help you make decisions as to whether or not you should re-up your position, you should reduce your position, you should increase your position. Like, all of those things matter. But trying to automate things in one way or the other, generally speaking, you end up losing. So I just don't like these passive long-term strategies. DCA, so dollar cost averaging, that kind of strategy is a short-term strategy. It is not a long-term lifetime strategy. Just like there's a lot of things here that are meant to be either short-term strategies or paired with other things. But people will hear someone go, use this strategy, because it might be the only one they've ever heard of. And everybody goes, okay, that's what I'm going to do. And that's how they end up doing a strategy and then trying to figure out why they can never retire, even though they diligently employed the strategy someone told them. So there's so much to learn about
It's really
investing.
deep.
Go ahead.
No, I was saying that's really deep. Just because you have to I think that you hear so often in the space, DCA. It's worked for a lot of people, but I would say, a lot of cycles previously have rhymed. They haven't all exactly, it doesn't exactly repeat exactly how the past cycle, but you have seen a lot of rhyming in the sense that these 4-year crypto type cycles act out very similar. And so if you DCA'd early on, and you DCA'd into the right things, like, for instance, like Bitcoin, so the example that a lot of people use, it was successful. But if you, if you're DCAing into something more random, there's just so much more to think about. Inflation, where the project is. Are they pivoting? Are they continuing to innovate? So I really like that you brought that up and kind of explained and taking that position. And I think that it's deep because it really makes you think there is a whole lot more that you have to consider. You can't just think because people DCA'd into Bitcoin early on, I'm going to DCA into X coin and token, whatever, and it's going to work for me. That it's there's a lot more there to think about. But Alex, I interrupted you when I asked you about the DCA thing. I'm not sure if you want to finish what you were saying.
No, it's fine. It's just, I mean, one of the things is that you have to remember if you DCA'd in, you know, following the market and you rode up from 40K to 69K, you didn't do great. Right. So you know, when we talk about people who dollar cost averaged in, and that's what DCA is for those people who don't know, for the people who just kept doing that from early on, they weren't still doing that for the most part, right? That's, again, it's a short-term strategy. It is something you do it to a point where you think you've basically you know, captured the value of the market at the current time. You're capturing value. You're not, it's not a statement of like you know, loyalty or anything like that. No one's going to come and look at the money that you invested in a particular thing and go, wow, you're a good person because you believed in that particular thing. It's your money. It's what supports your family, right? This is your future and your family's future, and no one else is going to care about that. To be honest, if you're in the US, there's no pot of gold at the end of the rainbow. Your company doesn't care about you. You, depending on your age, you know, are very unlikely to have Social Security when you retire. There's not money out there for you. You need to make sure that you take care of yourself and your family. And that does not mean listening to people who are saying things like be homeless with a Bitcoin. That doesn't take care of your family, right? The point is to put currency into assets. That's what currency is for. You put currency into assets and then you use those assets as you need to, right? You liquidate the assets either to buy better assets, turn it into currency, to buy better value assets, or you liquidate your assets in order to buy goods and services. That's what you're doing, right? You're liquidating it, turning it into currency, and instead of buying assets, you're buying goods and services. The point is not to align yourself with a community so tied to a particular asset that it's no longer an asset for you. What happens is that money then becomes unavailable to you. And that doesn't help you. That money has to be available to you. So what we keep seeing, especially like if you look at, for example, the Bitcoin cycle, is that there's a line of people basically who are waiting to liquidate as soon as the price goes up to a certain amount, right? Some of them are institutional, some of them are individuals. And that's why when we see rises, especially after a winter, we see a rise and that rise immediately drops. Why? Because everybody is trying to liquidate as soon as possible. Does that mean those people are never going to buy into Bitcoin again? No. It just means that those people need some cash and the Bitcoin market is liquid enough to take care of that. So, I mean, I think that we have to move away from this idea of like cult-like behavior in anything. It happens also in some stocks, right? Talk about people with like, you know, Tesla and other stocks. They're like, no, I'm never letting go of it. Well, that's dumb, right? Your Tesla doesn't care about you, right? Who cares about you, right? You have to care about yourself and your financial future. And in order to do that, you have to look at everything relating to your finance as the most valuable thing that you have, right? You're the one that takes care of you. You're the one that takes care of your family, and none of the investments that you make care about you or your family at all. They're not going to applaud you for being part of it. The people in those communities are not going to pay for you and your family to survive. So just all I'm saying is you know, make sure that you are logically looking at a lot of these assets as assets, and they make a lot more sense when you look at it as assets, right? There's actual
Yeah.
formulas you can look at.
Yeah. I mean, if you take aside, I think that you might say, like, say the Bitcoin community, you know, Bitcoin doesn't care about you, but the Bitcoin community do care about each other. The Matic community, Polygon community do care about each other. But let's just take that aside. Let's take that emotion out of it. I think there's a pretty good argument for dollar cost averaging assets you believe in, not just any assets, not just like, you know, things you think are going to go up necessarily, but dollar cost averaging things you
Which
believe
means
in.
you also did research.
Yeah, you did research, you believe in these things.
Verify.
You mentioned Tesla. I mean, so I bought Tesla in like 2017
Wait,
or 18.
can I ask this? Did you get
Yeah.
triggered by what Alex said?
A bit, yeah, definitely.
Dude, he
I am
mentioned
his
Tesla and
trigger.
Bitcoin.
I am his trigger.
What? I was like, oh no. I'm like, is this scripted? Like, Alex, like, how did you just hit all the trigger buttons in one go, man? I'm like, oh, poor Rock.
I mean, I think there's a pretty good argument for dollar cost averaging being better than trading. And I'm going to be, you know, just straightforward here. I've known hundreds of traders over the years. Actually, a lot of people may not know this. Lunar Digital Assets was a trading tool and algorithms and bots company for years. And we got out of that because we realized it's very hard to do. And that was with, you know, a lot of money put into R&D with that. And even we had a white labeled contract with I think it was Nomura Holdings, Japanese holding company worth like 50 billion or something. And so like seeing all these traders over time who are like oftentimes look like geniuses in a bull market and would even get me kind of FOMOing, where I'm thinking, man, I'm watching my friends. And I remember walking through in New York at Consensus one year, maybe 2018 or 19. And my buddy with me were walking and he's like, holy shit, I'm up $100,000, you know, on this trade right now. And we're all excited. He's like, oh, I'm paying for everyone. Let's get a suite. I'll pay for everyone. Well, the next day he lost like 200,000 or something. But, you know, that's just a stupid anecdotal story. But that guy got completely wrecked, got into debt. It was really sad. It was a disaster. And a lot of the people I knew who traded, I'm running through a Rolodex of names in my head right now. They all got wrecked over time. Honestly, there's only like less than a handful of traders I've known over the years that still trade and that really made it with trading or like trying to, and that goes for not as much, but also for trying to, I think what you're maybe more talking about is like trying to time the market, like getting out when you think it's too hot or whatever, which I think is more reasonable to your credit. But I think saying that dollar cost averaging and saying, well, the communities or the coin or the stock doesn't care about you, it's not necessarily about that. For me, it really is about that. But just mathematically, dollar cost averaging is a pretty good strategy. I'll pull up some stats from, I've been dollar cost averaging my nephews and nieces since 2017, putting at first only $20 on their birthdays and $20 on Christmas. So this is just, you know, two kind of somewhat random days of the year. And, you know, they're all up a lot. I mean,
That's not
surprising
dollar
amounts.
cost averaging though. That's just depositing.
How is that not dollar cost averaging?
Dollar cost averaging are regular deposits irrespective of price, right?
Yeah,
Where you're
twice a year.
continuing to put it. No, that's not. I mean, it's generally weekly or monthly, and
that
you can put a deposit
that's up
in.
to the person. It could be daily, it could be minutely, it could be hourly, it could be
No, it's
yearly.
not. It's not like if you put something in once or twice a year, that's not the same as dollar cost averaging, where you're doing like the idea is to do a mindless withdrawal from your account that takes out the emotion, which is one of the things that people love about dollar cost averaging and is its best asset, is that it takes the emotion out of the investment decision. But, and like I said, it's a good short-term strategy, but a long-term strategy, it's not meant to be, right? It's certainly something where you need to figure out at some point, is the price still a good price for the actual investment itself? It's not meant to be a long-term strategy, and there really isn't ever an asset that just goes up, forever. You may do well, like the person who put in $15.
True. Literally all assets go up forever, like all classical assets, big, like any blue chip stuff.
You're saying
just
no
mainly,
asset has
hold
declined?
on. No,
Everything has declined.
I'm saying, hold on. I'm saying partially because of inflation, these assets are kind of on a only up over time. Blue chips, like if you buy Apple, do you think Apple will ever be in 20 years? Is it possible Apple will be below where it is now? What are the odds of that? It's pretty low. It'll probably be above where it is now. Same with Amazon.
But people said that about IBM, about GE. Like, this is the thing, is that companies have life cycles, and you have to understand where a company is in their life cycle to understand where the value is. The value switches as
Yeah,
the
that's a fair
company
point.
matures. The what?
I said that's a fair point.
Yeah, so you just have to understand that the value switches, and the people who are making an investment decision into the company at a particular moment in time are doing it for different reasons. People are not necessarily investing into, Apple or Microsoft. Like, there are ones people are not investing into. Well, maybe they are now because of OpenAI, but like, let's say a year ago, people were not investing into Microsoft as a growth stock. They were investing into it as a cash stock, as a dividend stock, right?
And
As something
as
that
a
would kick
type
out
of
income.
savings and a
What?
store of value or a
Well,
retirement asset.
so that means that people who are investing into it, which is still increasing the price, but they're doing it for a different reason. It has to meet your reason. So first is that no one can tell you what investment strategy is good for you. You're the one that understands your own risk profile, your own resources, your own time frame. You're the one that has to determine your investment strategy. 2, no investment strategy is great forever, right? Your needs will change, your resources will change, your timelines will change. So your investment strategy is going to change. 3, the investment strategies that you use for the particular investments that you choose will not work forever, because you'll have to change up your strategy, or you'll have to change up your assets, because those assets will change and shift and mature over time. So either they will fail or they will mature, and both of those have different results. So you're going to have to essentially see where they're headed, and does your current investment strategy still apply to those particular assets? Investment is actually a super complicated thing that you can't actually it's not something that a group of people can say, you all need to do this, you should all invest in this. There's no single asset. And I know there's a bunch of people in here that are going to hate me for it, but there's no single asset that is great for everyone. Not Bitcoin, not gold, not Tesla, not Apple, nothing. There's no single asset that's perfect for everyone. It really depends on what's best for you. That's why anybody coming into a space and saying, you need to invest in this, don't listen to them, because you don't know that investment is good. They can tell you the reasons why it is a good investment for them and the benefits of that investment, but you still have to make your own decision as to whether that great company or that great project or that great asset is something appropriate for you, right? There's that last mile piece is still something that has to happen between an individual and that asset decision.
But now you're asking people, if you're telling people don't do a simple strategy like dollar cost average, or don't buy more conservative assets and just hold them for a long time, now you're asking someone to become basically a professional analyst.
I was about to ask, do you mind if I kind of jump in here for a second, Rock?
Yeah,
thank you.
Please.
Yeah, Alex, I think me and you would probably butt heads a lot on a trading floor. But I would be on Rock's side when it comes to having a more DCA approach. And a simple enough kind of question I can pose to you to ask, whether you should be DCAing or whether you should be lump sum buying is, Alex, how much Ethereum did you buy at $890, as a percentage of your portfolio?
I never talk about my individual investments.
Is it less than or greater than 0%?
I never talk about my individual investments ever. It's my policy.
Okay, so there was essentially a couple of hours where Ethereum was available at $900 in the last cycle. It's the same again for, Bitcoin. How much Bitcoin did somebody buy at 16K? And fair enough, you don't want to talk about, your direct positions or anything like that. And I apologize if it comes off rude, but I'm going to bet it's less than 10%, possibly going towards the 0% level. I mean, if you sit here and tell somebody don't DCA, why don't you just buy the bottom and sell the top? It's I didn't even think of that. Why don't I just buy the bottom and sell the top?
No,
if anybody
oh,
kind of
I respect that statement. And I didn't say don't DCA. I said it's a short-term strategy. It is not a long-term strategy. It was never meant
this
to
is
be.
a strategy that I've personally been using since 2013 in crypto. It's worked out extremely well for me. Now, I would say that there's a difference between DCA and dynamic DCA. So when the price goes lower, you just buy in at a harder amount. And that's if you believe, obviously, that the asset is going to survive. Don't DCA an asset that you don't think is going to survive. That's fair. You can't just DCA anything, apart from maybe the S&P 500. Some people will argue that, gold has been of a similar performance. If you did a dynamic DCA, you're doing quite well now. Yeah, if you just go in and put in $1 every day, you're probably not going to get the best performance out of that, as $1 spent when something is worth, 10 million in market cap versus $1 spent when it's at $1 billion. Very, very different prices. Often it would just come down to a general risk curve. Some people use a long-term RSI that they would kind of use alongside that. Other people would use like more advanced risk metrics. I think personally, I would keep it fairly simple on things like that. I think the most complex I'd ever use is a Fibonacci scale. Tell me, how much do I dynamically DCA into something? But so what I've learned from all these years of kind of, trading is I've gone from somebody who would have been, 95% trading, 5% holding, to 95% holding and 5% trading. And a lot of that came down to the fact of realizing that, nobody is smarter than the market. And it's certainly not me. And again, this isn't meant to ask kind of, an insult to anybody on this space or against you or anything like that. But I don't believe that anybody here is individually a lot smarter than the market. The market will make a fool out of you given enough time. And I've seen this happen to everyone.
And I'm so sorry. I have to leave in 3 minutes. And Michael has his hand up forever. And I just wanted to say, I'm not saying time the market, but I am saying you do have to learn about investment. Everybody has to. It sucks that in the U.S. we aren't taught about financials, like reading financial statements or money or credit or anything that's really important, like relationships or sex. Right? We don't learn anything really useful. Where if you fuck it up, then you're screwed for life, right? Or at least for a good chunk of years. But you are obligated to learn about it. It sucks, right? It's left to the family.
Algebra.
What?
We learned algebra.
Yeah, I mean, like I could what am I'm supposed to basically learn the height of the flag at the top of a building that I'm not standing next to without a ruler. Like that is going to help me how? I'm not an engineer. That helps me zero. But I wasn't taught any of this information about investments or investment strategy. That's actually why I teach it so much, is because it is incumbent on us to understand it, because the idea that someone else is going to take care of our finances is ludicrous, right? We have to figure out this stuff. And so I'm not saying time the market at all. I'm saying understand investment strategies and figure out what works for you. And even though we love things that are easy to explain, that are one sentence, that's like I'm told so often, oh, you should simplify all that. But if I simplify it that much, then you're not going to understand enough about the context. You're not going to understand it enough to use it, right? If I give you a very simple statement about something that's fundamentally complex, and I don't try to give you some of that complexity, then I'm shortchanging you. I am not giving you information that is useful. What's useful is the information that tells you, here's a rule. Here are some of the times that it doesn't work. Here are some of the ways you might see it working, and here are some of the ways you might see it not working. Now you have to figure out when you might want to apply it. So all of these things together it's necessary for people to understand how rules like investing rules, things like that, how they work. And I wish it were easy. I wish we could say, here is the way everyone should do this. And as a result, everyone will actually have money at the end of their lives. And that's just not true.
But see, I think that is true. Like I find, keeping it simple. If you tell somebody, you know, dynamic DCA, the S&P 500, they will make money at the end of it. And this is kind of the issue. We're having an argument of like you need enough money to retire, and in trading, what is it? Something like 90% of people in crypto exit at a loss. Like a lot of the target that should be hit here for people is just don't lose all your money.
This is not about timing the market. This is about understanding your investments. I'm not telling anybody to try and time the market. That's trading.
Yeah, no, I'm not even touching on that one anymore. I'm not saying, you know, on the time the market side of it, but even on like trying to make things more complex and saying, you know, you're shortchanging them if you don't give them more information and stuff like that. I mean, I've seen people with trading charts that, you know, would put my entire college degree to shame, but they end up losing money. Whereas there was a very simple approach all along, was that this asset is going up. So if you put in amounts of money, asset is going lower, it will come back up and then you make more money. Like keeping it simple is what was.
Can I jump in, and since to kind of marry all three of these worlds real quick? So I agree with you, Alex, that, you know, it's good to try to get people to care about investing. I think that sentiment from you I really like, is like, you know, don't trust someone else with your.
I'm just throwing that out there real quick. I know you're finishing your thought.
It looks like she left. Okay.
Yeah, she said she had to leave.
Yeah.
Just for everyone to know.
Yeah, sure. So I guess to the audience, or if she listens later, I like the sentiment of getting people to learn about investing. But I can say that as a strategy, dollar, like I could give you, like, I think it's 5 words. Let's see. DCA, S&P 500, and hold forever. I don't know how many words that is literally a strategy that's incredibly simple and has worked for it's averaged 10% returns with dividends for 100 years. Same thing you could say with Bitcoin, like literally dollar cost average and hold forever. It's worked for 15 years now. And I mean, if I wanted to ask her, you know, if my strategy then was, I'm going to DCA Bitcoin for at least the next 20 years. I'm curious if she would think that's, you know, a bad strategy. Because she's saying, I don't quite understand how she's saying DCAing is not a long-term strategy. I mean, to me, DCAing, that's exactly what it is. It's only a long-term strategy.
Can we get, real quick, guys? Michael, let's go to Michael real quick. I usually don't go back on the hands, but he's just had his hand up for so long. I like when people are jumping in. You know, that's how the show is. It's just dynamic. But Michael's just been sitting with his hand up for so long.
They were arguing, and I didn't want to. It would have been very confusing for people. So here's like why she says that DCA is not a strategy. She didn't mention that, but she could have. Is that DCA doesn't have a sell signal. And a strategy, if you go by the book, a strategy has a buy and a sell signal, an enter and an exit. And if you don't have an exit, it's not a strategy, because if the asset that you're DCAing into goes to zero, you go to zero also, right? There is no strategy to get out. Like a pure strategy has an exit. Okay, that's important. And the other thing is, because everyone understands Bitcoin, if you DCA Bitcoin for the last 5 years, you make 111%. That's nice. But are you kidding me? Bitcoin was at $300 or 300.
I find that hard to believe.
Yeah, I'm on the DCA calculator tool. You can go and do that yourself and come back and
what's the let's all, maybe, because I was actually looking for one while we were talking earlier.
11x sounds about right, but I know what you're saying. It was at $300. Why didn't
11x? No, he said
11. No, it's not 11x. It's 111% profit. Not 11x.
No,
it's just 100%, 111%. Okay,
can't be right.
That's not a lot of money. Okay, so if you DCA for the last, actually I said 5 years, and you put in, it doesn't matter. You weekly $200, whatever.
Give us a website. Where can we play?
Okay, DCABTC.com. So tell me that's a good investment, because I made 15x on Bitcoin in that time. Like, I'm just saying, right? So even if you buy
but there's you might be a good trader and you might have good algorithms, but there's another 100 traders who lost everything, or
if you have a simple strategy that buys and sells, buys above 200 moving average and sells below 200 moving average, it's a stupid strategy, but still it's better than DCA. Okay, just to be
I
clear.
think this site's broken. I was trying this earlier. It wasn't, the numbers didn't make sense. Like the total invested didn't add up and stuff. So I don't know. Is this site reliable, guys?
I don't think it is. Even the chart is broken.
It sort of depends, right? The DCA,
I have a Bitcoin
DCA
value here
is
going
easy for
great.
people to wrap their head around.
Yeah.
Something like Bitcoin that's like hard money that over time has proven to keep going up. Like, yes, you'll do well, but the timing of it does kind of make all the difference. And Michael does make a good point that if it's a buy only strategy, it's not really a strategy.
But yeah, there's no such thing
That's a
as
fair
like
point.
DCA without selling. DCA
But
means
then
like
you look
selling
at
at a point.
someone like Michael Saylor, and he's only buying, and then he's taking loans against it, and there's creative ways you could maybe do it, but
Yeah, that's
but
what came to mind when someone said, "Well, you have to sell for it to be a strategy," and I was thinking, well, no, you kind of don't. You could just borrow against it for forever, and then just hand it down to your kids.
Yes, but that works only for really good assets, like really good assets, and most of them are not such assets, right? So if you do DCA on everything, that's not gonna end up where you're saying, right?
Yeah,
Bitcoin,
for me, it's like Bitcoin, ETH, Matic, Gold, S&P 500 are the things that I would put in that kind of, maybe, a Microsoft, I would probably put in that category, Apple, Amazon. But I guess at some point, if the story changed, like if there was a new disruptor that was killing Amazon, and even if I missed out because Amazon was down 50% when I sold, I suppose if it looked clear that Amazon may not live forever, well, then I guess it would make sense to get out. So it is nuanced.
I found a working chart. So if you were to DCA in $100 daily, starting in, that's January the 1st, we put it up to January the 24th. Okay, so starting from January the 24th, 2018, up to January the 24th in 2023, you would be up 261%. I mean, yeah, it's still not incredible, but put it back, like, say, let's go back another 5 years or anything like that. Like, put it back to 2014.
Listen. Before you do it, I did all of that. If you go back before 2018, you make a massive amount of money. Massive. Everybody makes money. But 2018 is interesting because it was a bear market, right? Where you have actually, if your strategy fucks up that time frame, you lose money because it goes down. So if you start before that, it just goes up. Okay.
Yeah, but that's the whole point of DCA. You can't tell when this stuff does happen. You just buy in more heavily when it does.
No, I agree. But I'm just saying, if you go before 2018, almost every strategy that I've tried on Bitcoin will make money. It's a bit cheating.
Yeah, it will.
We've been
in that time.
We've been talking about DCA for a little bit here. I just want to quickly introduce a couple new people that have joined up. Owen, can you take 20 seconds to introduce yourself? Also, Revel, 20 seconds, and AK, 20 seconds after Revel. Owen, go first. Oh, and also we have Beer and Weed. Let's get everyone introduced, and then we'll get another question.
So, do you mean we have a person called Beer and Weed, or you have Beer and Weed for all of us?
Yeah, I'm passing it out on stage, bro.
Awesome. Appreciate it, man.
So right there on the panel.
Yeah, so my name's Owen. I've been in crypto since 2013, 2014. I originally came on board as the first core developer in Dogecoin. And a lot of the work that I do now is all around the decentralized side of crypto. As in, back in the day, a lot of scams, a lot of centralized rug pulls. So my love is for fully decentralized stuff, keeping things on chain, smart contract development and stuff like that. Nowadays, I do most of my time is spent in crypto in hodling when it comes to that side of it. But the actual time that I invest into the industry is on the development side of it. Granted, that has included a lot of charts, graphs, and stuff like that, just to show that general price action and, win arguments. But that's me. And yeah, thanks a million for bringing me up, by the way. Sorry that I came on to immediately make enemies. It was not intentional. Great to be here.
You came on at a good time. I think there was a ton of really great points being made. But yeah, I want to get everyone introduced real quick. 20 seconds, Revel.
Hi, everyone. My name is Adi Seidman. I'm the CEO of Revel. Great to be here. Thanks for having me. We're a personal media marketplace. Think about a gamified marketplace, kind of a cross between Instagram and Robinhood, where you can invest in people by owning their NFTs It's gamified. You can earn yield in people. We have tens of thousands of users, a new mint every minute, a new trade every 10 seconds. Happy to join the conversation. Thanks for having me.
Awesome to have you here. AK, 20 seconds.
Thanks so much for having me. I go by AK. I privately manage portfolio and crypto hedge fund, and I've been in crypto since 2017. I am one of the strictly like the major type of traders. We stay on the majors. We don't really dabble with too much small. But as of recent, since after COVID, we started incubating a lot of little projects. And successfully now we have over 30 projects incubated under our company here. So happy to be here and happy to always provide insights and of course any projects that are looking for liquidity or they're looking to pitch or anything. We're always open to hearing them out.
Very impressive, AK. It's good to have you back. Also, Owen and Revel. I know you guys have all been on the show before. Let's go ahead and pass the mic on over to Beer and Weed.
Yo, what's going on, everybody? I'm Beer and Weed. I'm a recent NFT project that was launched on Corgi Studio with beer and weed as the theme. So, yeah, I'm a fucking degenerate, and I'm just trying to learn more about the Polygon ecosystem, and I'm just trying to grow. We are so fucking back.
Good times. All right. I always feel bad. Sometimes we don't, the conversation is just going too hard and we don't introduce people. And that's not a good look for all roads lead to Polygon. So now that we got everyone introduced, Rock, do you want to go back to DCAing or do you want me to throw another question?
I want to say that Beer and Weed, for those maybe listening and not watching visually, his PFP is a beer mug that looks blitzed, smoking a joint and eating a slice of pizza, and sitting next to a pot leaf that is drinking a beer and eating some pizza. Looking good.
Good time. Well, if we're not passing it out on stage, let's go ahead and just ask another question here. You know what, Poldo, we haven't heard from you, so jump in, bro. But this question's for everyone, just like always, and for anyone that is maybe a little new to the show, you don't have to raise your hand. Just jump in, answer this as you see fit. So, what key factors do you consider when analyzing the potential of a cryptocurrency for trading? But you know what? That's the scripted question. Could be trading, investing, hodling. Go ahead, take it away. Whoever wants to jump in.
Real quick, I was just going to say, because I got to kind of jump, I got to take my son to an appointment, but I just wanted to say thanks to everyone up on the stage. I appreciate everyone listening in. Check out DFX Finance. Again, fiat-backed foreign exchange protocol gives you the closest spot trade out there, especially on Polygon. Just offered up a new PAX fee pool that's, paying APR out at 100% APR. So pretty good. So yeah, thank you guys again. Really appreciate the time and look forward to jumping on another call with you.
Thank you for being here, bro. Have a great weekend.
Thank you. You as well.
Cheers.
Yeah, so anyone can take this question.
Wait,
what are you looking at?
Bitcoin 42K. Had to say it.
Really? What's going on? All those lead to Polygon and bumping Bitcoin.
And all the doomsday and naysayers were saying that the CME gap fill at 39 or 39 and a half was not going to hold. I don't know. I put some remarks out. I like the zone. I nibbled long and we're in profits today. But I did short the 48,000, and that was the hype that everybody thought was going to take us to the moon. So peculiar area here. I just kind of started closing out my longs because I'm a trader. But we stand to see what's going to happen next.
Well,
I'm still waiting.
I gotta ask 10K. You then.
I'm still waiting for Bitcoin 10K from Gareth Holloway and Richard Hart and all the other haters.
Well,
it's not coming. Let me ask you this though, AK.
I infamously shorted Bitcoin in the 60s. I then infamously put out an alert to a lot of my followers at 32,000, dubbing it no man's land below 32,000. That was just the zone that I wasn't very interested in Bitcoin. I moved over to the stocks. But I'll tell you, in the deepest of my thoughts and heart, I did not think Bitcoin will ever go to 10,000. The lowest I thought it would see was about 17,000, and I think it went to 14 on a wick or 15 on a wick.
14.5.
So I mean,
All right, bro,
guys,
you sound like a genius, but tell us about the calls you got wrong.
I'll tell you something. I will reveal, and you can audit my calls over the last 3 years. I have gotten very little wrong in this beautiful bull market of crypto, especially where you're buying at good prices. I was one of the early buyers of DeFi and Solana, and those were my big tickets. To be honest with you, aside from the majors, but the ones that I got wrong, uh, probably just getting wicked out on certain leverage trades. That's the times I've probably been wrong. It's not so that I bought a crypto and it crashed. Like I said, I'm a majors guy, so most of everything I bought is still alive and well today.
How about on Bitcoin? Because those were the examples you were giving of when you made.
Yeah, the biggest killer.
I mean, were there times
May 18th, 2021. That was, I think, my biggest killer. That was the day that Bitcoin dropped 70% overnight. So did Ethereum and every other.
70?
I think it was like 50 to 70%. Yep, that's right. Check it. The day, May 18th.
No,
I remember the day. I don't
70.
remember the
It could have been
price.
70.
Yeah, it was like a 50% drop overnight.
Wow.
Because I had a 2x leverage. I mean, I'm not a high leverage guy. Okay. And especially when, I'm managing funds, I can't go beyond 2 or 3x at certain times on certain leverage. And it has to be a major. And I told all the, followers and all the investors that it's time to get out. But I was a little cocky with one of my positions on a 2x leverage, and I had it be liquidated. So I know that it dropped more than 50%.
Was it a large position?
It was a few $100,000, so it hurt.
I mean, just I guess that doesn't matter, but as a percent, I mean, of your overall.
Percent-wise, no, not a high percent, but it hurt. Because it was something that I foreseen. I didn't listen to myself. Oh, the market can't drop 50% overnight. Go to sleep, wake up 4 hours later, flash crash. So that taught me a big lesson in crypto.
Why did you short 48K? I think this will be educational for a lot of people here.
Well, it's different times and different zones. I'm just I'm very much so a technical price action psychology type of trader. This is how we run our fund. I mean, we usually take trades that are no longer than 3 months out. And in crypto, 3 months is even a long time. So we started seeing a lot of flashing signs back in October of 21 at the top of crypto. I believe it was the top of the markets, but I know that crypto was lingering in the 60s. And then that's when we started our master short. And then after then, we started taking mini longs in certain durations of the cycle. So whenever we wouldn't want to maybe entirely cover our short, but keep some open, we'd start taking longs to hedge against that short position, just so we can really gain the trade benefit of the chop that they like to call it. But after 32K, we let it go. I didn't touch crypto till it passed 32K again. That's the truth. I haven't touched it in a year and here we are now again. And now I'm interested. Below 32K, we just were not interested.
Do you have any of your charts from that? Did you post anything about that 48K?
Not on Twitter. Short? Not on Twitter, but I am going to start now just resharing all my screenshots, because I never really operated on Twitter until this last year, to be honest with you. I'm very new to X.
But I thought the 48K was this recent, just like a week ago or 2 weeks ago.
Oh, yeah. I was on the Mario Neufeld show, and they asked me about about what I believe. I could probably clip it. And I told them I'm not optimistic. It's at 48K. I would take short. 51 is my top. I'm an extremist, and I'm not a believer in the price here today. And it crashed. Well, it didn't crash, but dropped.
Interesting.
Tell us what's happening
now. Another way to look at that, and I was wondering if you were going to mention any of these things, but the reason I was looking at 48K is because we have been running for a while, and it was a very significant resistance. So just like looking left on the chart, and also I use Fibonacci. So
that's right.
Looking at some of the indicators, yeah, looking at some of the indicators and finding confluence, and then also, being that it was a major resistance, looking, by identifying that by looking left on the chart, I was definitely thinking that it would be a hard area to break. So yeah, but good points as well. Okay.
I will clip my highlights, and then so I know a lot of people, you guys like to see a lot of the views, and on Twitter people like to see, like, especially from the fintech community, they like to see a lot of the charts and a lot of the internals of people's theses, and that's something I appreciate being on this show and getting a little bit of a voice, because I share these all the time for free to people to follow. We don't want, nobody wants your money or anything. You can take a look at these looks. As of most recent, I announced my long on Bitcoin at 39K on Twitter. And again, it's up today. So I'm trying to grow my platform, and I'm always happy to share free charts and technical analysis and things that we've been very successful at doing. And I'm up to be debated. I'm always happy to debate any time of the day, because we put our money where our mouth is. I wouldn't come up on stage and say anything here that I don't fully know and have done.
And your
Very cool.
reputation's on the line. I think it's such a cool world we live in, where like it back in before like YouTube, before Twitter, if you wanted to find if you wanted to know how to do like something with carpentry, you'd be kind of stuck in some situations, because you might call a carpenter and ask him, hey, how do I do this myself? And they would be like, what? I could come do it for you. You could pay me, but why would I want to teach you how to do it? Or if you were like a trader maybe, or whatever. But now you can, if people want to build their platform, they want to build their following, and that could be monetized in other ways later if you so choose. Or people just like the fame of, hey, if I'm a good trader and I teach other people how to trade, they'll be happy with me, and that'll be a little fulfilling in my life or whatever. So it's kind of cool to see that people are willing to give, like Aztec said earlier, you could take trading courses, or you could just, there's so much free information online from people like UAK and Aztec and so many other, bright minds, and GIGABRAINS, as this space is titled, that you don't necessarily need to pay. It's pretty cool. Little side technology, rant.
True.
But what if
Real quick. Just real quick, guys. Going to take care of some housekeeping co-host stuff. So we do have 2 giveaways. They should be in the. They should be pinned to the jumbotron above. One is with Saiyan Pepe, and if you, I guess if you screenshot that you participated in this show and post it in the comments below, you might be able to win one of the NFTs. And then there was another one. I think Poldo also had a giveaway that should be in the top. Haven't mentioned it since the beginning of the show, so want to just throw that out there for anyone in the audience that is looking for a giveaway. Again, not sponsored show, but we do allow projects to do giveaways. In MC2, I think you were going to say something. Oh, and real quick, welcome DYL.
Yeah, but I
Yo,
wanted to.
what's up, GM? Thanks for having me up. Great talk today about the trading and everything. It's great to hear some different strategies for show.
Dill, famous Dill. What's up, my man?
Yo, Rock, how you doing, man? All
Doing
good, all good. Always happy to be hanging on the quick swap spaces. And yeah, like I said, great conversation today. Important time to be getting into crypto. I think right now it's just like, if you're buying now, you're doing the right thing, whatever strategy that is.
I agree. The market's very, very ripe right now. It feels right in terms of a crypto bull market, or set up for a bull market right now. And again, a lot of from a contrarian point of view, a lot of people are now, with the ETF approval of Bitcoin, are open to the idea. Now it's something that's becoming a lot more mainstream as before. So I'm very excited for the crypto space. And again, I can see that there's so many projects that have been battered that actually have a lot of positive outlook in the future. So we are shopping around right now.
Nice. MC Squared Finance. I know you were going to say something.
Yes, well, but I wanted to ask before, because like currently, if you want to share your trades, you do it with pictures on Twitter, but that is not really verified. And for sure, if it's a long trusted account, then you can say, great, must be right because they have 100K followers. But actually, what do you know? And how interesting, how important would it be actually to have trades, especially then also like strategies, so the series of trades that you do on-chain verified?
Yeah.
I think that would be cool, but it would have a small market.
I really like it. I mean, so even with the on-chain trades that you can verify them easily, one thing that I do myself to kind of, hold a receipt and stuff like that is I will post about it on Twitter, but I'll post before I enter the trade. So I have one from a while back where I was talking about ordinals, and I said, I think it's actually going to bottom out, like if not here, then very near here, because it was a fun part of the cycle and there's a lot to be unlocked from it. That was at like $2.50, and within 3 weeks it was back up at $60 or something like that. So obviously I quoted the tweet to myself to do a victory lap, stuff like that, and I had it for Solana as well. It was between $7 and $13. I said, look, I'm a buyer here because I think that that's an EVM alternative. It's not going to beat Ethereum, but it's the alternative. Like Cardano, I felt fell down a pit. It's not going to get out of it, and a lot of that capital will flow to Solana. So again, you can quote tweet it then, a year later, and then you say, hey, I was right. One thing I'm doing that a lot with lately is actually Matic. As I think that right now it is just being massively undervalued in terms of what it's actually brought to the ecosystem in the past and what it's going to be bringing to the EVM ecosystem kind of going forward. And this is again done like, I have my own thoughts on it in terms of tech, as in Polygon have a nuclear engine in the time of Steam. And I think that that's just being slept on by so many people right now. And then there's, the unified liquidity model that they're working with as well. See, this is kind of roundabout backtracking to, what makes you invest in something or what makes you buy something. And for me, I kind of lean into my own strengths on that. I'm a developer in the space over 10 years. That does come with this innate ability of, I guess, like being decent enough at sniffing out what's crap and, seeing real tech where it was built. And a lot of that on Polygon side is provable stuff. It was the same with, ordinals with Solana, is that they built this already. But with Polygon, I find it is nearly the only one that has not really been priced in by the market at all. That people don't really seem to grasp the concept yet of, what ZK will actually perform like, particularly with multiple chains and unified liquidity. Unified liquidity is probably the largest part of this now for me. That, we've got new chains spinning off every couple of minutes. I think there's a tweet from me about a year and a half ago saying next cycle meta, we're going to see a new chain for everything. We'll probably have a USDT chain, like everything will have its own chain. But the problem with all of these chains is that they're going to fail to attract liquidity outside of, a couple of whales that they might get in at the start. And then you're going to see protocols that will be, incentivizing as much as they can, but unfortunately often to an unsustainable level.
Or there'll be walled gardens.
Exactly.
Just to add on to what you're saying, the walled garden approach is not going to work. That's why with Polygon's new ag layer that they just released yesterday, saying it's coming in February, it's going to be a huge deal, like you're saying,
yeah,
Owen.
100%.
But yeah, I just had to throw that in there.
Yeah, 110%. And we've seen this with certain subnets on, other networks as well. That, this really cool project kicks off essentially their own chain, and then you have to bridge onto it, and then they have their own swap on that chain and can't interact with anything outside of that. And you essentially have slippage on everything. You want to buy Ethereum, 20% slippage, stuff like it is absolutely not scalable, does not work, nobody wants it. But when you look at like Polygon hitting a 1-2 punch with both ZK, the multiple chains that can run off that, and a unified liquidity layer where you could be on a chain which is dedicated to, one very popular product and one very popular token, there's availability to actually grab liquidity from the greater Polygon ecosystem, which ties straight into the Ethereum ecosystem. And I think that is what solves pretty much every problem we've seen with L2s. Like, it's like what I said with, Solana, said they're great alternative. I think EVM is the winner by far. I think that was decided last cycle. And I think all that's left now is deciding what is going to be the main L2. And right now it's a heated battle, but I think nobody is seeing the punches that are about to be pulled. Like, it's again, nuclear in time of Steam. This is, everybody's playing on, PlayStation 1, and all of a sudden the PlayStation 5 is about to drop. Like, it's going to do a lot for the market. But that's how I typically tend to, invest in things, and obviously not financial advice, etc. Everybody can be wrong, but for me, it comes down to looking at the teams, what they've built, the following that they've got behind them, and just pure tech. And I think that when it goes to the actual long-term look on things, you can be amazing at trading, but if you can actually recognize the tech that's underneath it, like somebody who did with, say, Bitcoin or Ethereum at launch, you will outrun traders by miles. So yeah, that's my general way.
I totally agree on that, man. I really do. I'm curious, Aztec. I know you're a good trader and you believe in trading. I know you're nuanced in that, and I know you probably don't think like every person should be trading. But what do you think? If you had to, because what Owen just said is really powerful. That knowing the tech and understanding these things and understanding like where the market's going, because that's also something, Aztec, that you're really good at. You've called things years before they happen, and you've been pretty good about calling the general direction of the industry. So what do you think? Trading? Because you said trading, but when it was trade or hodl at the beginning, you said trade. But what about trade or understanding the fundamentals of the tech?
Yeah, and I might get rugged here because it's starting to get kind of buggy on my side. I usually get rugged.
I was rugged. I couldn't hear people too a second ago.
You can hear me though right now because it just keeps.
Yeah, I can
glitching.
hear you. Yeah.
Okay, so I'll try to go and answer this before Darren rugs me behind the QuickSwap account. But in my opinion, again, like this was brought up several times, throughout the course of this conversation. I think you have to figure out who you are. Are you a trader? What type of trader? Are you an investor? Are you short-term, medium, long-term? What type of investing? So I feel like I've figured out who I am. I'm a swing trader. I like to, and also a value investor. So I kind of swing between these. And as a value investor, probably more predominantly, like I believe in looking at the chart from a long-term, kind of zoomed out preference. So, daily, weekly, and then I'm looking for value on the chart. And then I think it's extremely important to understand what you're investing in. Is it future-proofed? Is it going to,
Oh, come on. He got rugged.
Yep, that's the rug.
I got him.
Aztec, we can't hear you if you're speaking. Damn it.
I waited till he'd spoken just long enough, and then figured that.
And I think there's one person that one or two people maybe that I can't hear, because there's times where the conversation just goes blank and then someone responds to someone and I don't know what's happening, but whatever. Thanks, Elon.
Just for me as well. I have the subtitles on the computer. That helps
someone's
me to read.
Can people hear who's talking?
Yeah, MC Squared was talking there. Can you hear me?
Okay, I'm rugged. I thought that someone was messing. They were talking and then it went blank. But okay, I'm gonna shut up.
Just to jump in here, we've got time. Narb came back, and he was going to do the Roman Colosseum segment of this week. That's Aztec back.
Hey, can you guys hear me now?
Yeah, Darren just said that Narb came back to do the Colosseum thing. We're a little out of time because we were gonna start doing community stuff. I really wanted to do that earlier today again, but we never do, and then it takes forever. But yeah, let's do
whatever
it. Let's
you guys
do it,
want to
Narb.
do, we can do. Sorry, I had to jump off a little while ago. I had to get on a call real quickly, but whatever you guys want to do is fine.
And then there was a couple housekeeping things I did want to talk about. I mean, one is and maybe Narb, you can jump in here.
Let me finish what I was saying real quick, because it won't take me a second. I think it's important.
Yeah.
So yeah, I'm a value investor, swing trader. I'm more of a value investor though. So I'm looking at charts zoomed out. I'm also looking at the fundamentals. What are you actually invested in? I think some of the really important things is, the team, the development team, future proofing, and then is that team able to pivot well? Because crypto moves so quickly that you need a team that isn't just going to be the next thing and then fizzle out, but also be able to pivot and keep iterating, so that there's the fundamental aspects. And then another thing that I consider greatly is macro. So taking traditional and the traditional. Well, so with macro, just like the general outlook of the world. I'm trying to oversimplify this, but taking that into consideration and seeing how that might impact the crypto market. And I think it really takes all three of these things to be a really great investor, but more specifically like value investor. So that's my answer. But yeah, I wanted to finish instead of I think that's. I don't think enough people also consider like all these things, these three things, and then mix them together. But Rock,
I
what were you
feel
going
like
to say?
that was the best. I think that was like some of the just cleanest advice on the show today. Yeah, I love you, Aztec. You're awesome, man. You're one of my favorite people in this space, like hands down, man.
Much love. Love you too, Rob.
So I did want to say though, because you mentioned man, I don't know if we have time for the Coliseum right now because we have some things we have to cover. Is it possible maybe we bring Narb next week for Coliseum to give him a proper amount of time?
Narb, are you able to?
I should be able to. I think I'll be free next week. Yeah, that's fine. Like I said, you guys can do whatever you want to do.
I just don't want to rush it, Narb. You're a really important voice in Polygon, and I don't want to have to rush you because there are some other things we do still need to cover. I wanted to talk about the recent update that Polygon did yesterday. Can you maybe Narb or Aztec or someone summarize? Or I know the Polygon account is co-hosting. I don't know who's behind it right now. Maybe Pixo. Who can outline yesterday's update, because this is important, very important.
Narb, take it away, bro.
I was
With
gonna
the
say, I
ag
don't know
layer, I'm
if
guessing.
Polygon wants to take it, but yeah, so Polygon yesterday announced the ag layer or aggregated blockchain. So basically, what this is it's the third iteration of blockchain. So we all know that blockchains in general run into lots of different issues with monolithic chains. There's the trilemma where you're sacrificing one point. With modular chains, there's fragmented liquidity. Basically, what this is it's bringing modular blockchains and monolithic blockchains, taking the benefits of both of those into one. So essentially how this is going to work is these for example, let's say two different CDK chains are plugged into the Egg Layer V1, which, by the way, the Egg Layer V1 is launching next month. The first version is launching next month, but I believe there'll obviously be many more versions after that. So the first version is probably not going to be the fastest, most smoothest experience, but you got to start somewhere. But basically, let's say X1 plugs into this egg layer and ZK EVMs obviously will be plugged into this egg layer. You'll be able to, like, from the user's perspective, you'll be able to almost use both chains at once in a weird way. So, for example, say if I'm holding a stable coin on the X1 network, which is the blockchain built by OKX, and I want to buy an NFT on ZK EVM, I can do that without bridging. So I would say the main thing here for me is that this eliminates the bad user experience of bridging from chain to chain, which we all know is just not great, especially for people that aren't crypto native. So from the user's perspective, all of these chains are going to be connected, unified, right? Unified liquidity and unlimited scalability. So the unified liquidity is there. The unlimited scalability comes from having all of these CDK chains connected. So we're going to have, hundreds of chains in the future. And this is creating an experience that, again, the user feels like they're just using a single chain connected to all of these chains. I hope I explained that somewhat well. I still have to do, a little bit of research. It just came out yesterday, I think, or maybe 2 days ago. But I'd say the main benefits, it's just huge from a user experience perspective, because you're eliminating the bridging from chain to chain. Like, all of these chains will be connected as one.
And this truly, really, it solves, like, this is kind of crazy, but it really solves the entire industry's biggest problem. So, like, you go back to Bitcoin and the block wars and all these people would argue about, should we scale on layer one? Should we do larger blocks? And some people would argue, no, we should scale in higher layers, layer 2, layer 3, whatever, Lightning Network, Liquid Network, etc. And what Bitcoiners concluded was, we scale in layers. We don't touch the base layer. We ossify like a fossil, the first layer. And then, interestingly, Ethereum, a very different community with very different ideals, came to the same conclusion. They were working on, like, they were going to try to scale, like, kind of on both. But probably at one point, I would say it was probably like 50-50 or primarily in higher layers. But, they were going to use sharding, and now sharding is not as talked about now, because I think people have just realized that the different layer 2s of Ethereum could accomplish the goal. And with the vision that Polygon has, see, the big problem with that, though, is if you have a bunch of different layer 2s, they can't, you're fracturing this liquidity, right? You're getting more slippage on a trade. So, like, to do an ideal trade, you'd have to do, like, 1/5 of the trade on maybe Polygon, and 1/5 of the trade on ETH, and 1/5 of the trade on Arbitrum, and 1/5 of the trade on Linea, and what, what I mean, to get less slippage. But what you can do now with what Polygon's building with, interop layer and ag layer and LXLY bridge and CDK, is all these chains can build and be layer 2s, like OKX, like Immutable, like Manta, Polygon ZKVM, Doge chain soon becoming an L2 of this. All of these, I mean, there's going to be hundreds, right? But the problem there is you got a bunch of splintered liquidity, right? But now with this, you can unify all that liquidity. And you can not only just bridge from one chain to another easily and trustlessly, the most important part, but soon, I don't know how soon, like, this will fully be fleshed out, but you'll also be able to, like, now do a trade between 2 layers, or build one applet, or ultimate holy grail is build one app on one layer that talks to an app on another layer. So, like, you can have, USDT, someone mentioned earlier, have its own chain and get the gas fees for whatever's happening there. Maybe that's where it's minting the USDT, and then and maybe it has even some, like, whatever, QuickSwap or Curve pools or unit pools or whatever. And you can do your trades there. And the reason they might want to do that instead of being on another chain is because they could get either different speed parameters, different security parameters, or they can also be the broker of the block space. That's one of the big things that L2s are doing. That's how Base, using OP Stack, that's their whole business model. They don't have a token. They're just brokering block space, meaning if there's 1 million transactions a day on Base, and those transactions, they're charging, let's just use a number, $1 per transaction. Okay, that's $1 million they make a day. Now they roll that up to Ethereum, and now they're, that Ethereum roll up, if that costs them, say, 100,000, they just made the chain made 900,000 brokering, standing in the middle of and rolling up to Ethereum. And then, of course, same thing with, like, all of these Polygon ZKVM chains, exact concept. You're brokering to these, and Polygon is coming with some incredibly huge names, with OKX, the 3rd largest spot exchange in the world, which I think is going to be, maybe big. I mean, I think OKX probably has more volume than Coinbase, but I'm unsure. Someone can check that. But so I think actually OKX chain, their OK1 chain, is going to be huge. I think that's like a serious competitor, because we saw Binance Smart Chain, how big that was. And we saw Base, how big that has been now. These are smart contract, EVMs for sexes, basically. And now I see this OK1 coming. I think is going to be huge. Speaking of Manta, which we mentioned a few times on this space now, I think it's been pumping and people are all excited. It got to like somewhere between like 400 to 800 million, depending on what analytics site you look at TVL. And now keep in mind, guys, when you look at TVL, you look at Polygon POS, and it's at whatever 800 million or I think a billion with stables or whatever overbuilt. Then you look at but that's not the only TVL. People aren't understanding, and I think this is not advice of Polygon. I see, they're here as co-host, but this is my own personal just opinion. But people are not pricing in that these different all these different chains are part of Polygon. So like, it's like when you look at Ethereum, you don't just look at Ethereum's TVL, you look at also Polygons and Polygon ZKVM and Arbitrum and Optimism and Linea and Scroll and Mantle and ZK Sync, etc. You look at all of these are all part of Ethereum, right? And same thing on Polygon. Now, you don't just look at Polygon POS, you look at Polygon POS, ZKVM, Dogechain, Manta, Nubank, I think DraftKings is I'm unsure of that one, and I always keep forgetting. But I mean, DraftKings we just had on. Oh shit, no, we didn't. We're going to have on. I think I could say it. Yeah, we're gonna have DraftKings on. Cool. But anyways, all these different chains, you combine all those liquidity, and that's Polygon now. And that's that's bigger than any of these other L2s if you combine all of that, which is incredible. And people I think they're not realizing that yet. And I think we need to do a better job of explaining that to the community.
Ooh, we need some sound effects after that one. The clapping.
100%. I'll give the clap.
There we go.
And real quick, Rock, I'll just add one more thing to that is in terms of timelines, from my understanding, is February will be the version 1 mainnet. It's obviously not going to be like the full version of this. I think they said, it's obviously going to be a little bit slower to begin with, maybe a little bit more expensive. But from what I understanding, I believe Mark said this, is that the full blown game changer version of the ag layer will be ready in 6 to 8 months is what they're predicting. So, sometime in 2024, this will be like full on ready to go.
Wow. And I know that there's some big updates coming. I think one of the big problems and reasons, I don't know about problems, but ZK rollups are an incredibly hard technology. And like I would say 100 times harder than optimistic rollups, right? So optimistic rollups are great because they're way easier to implement. That's why you see like Arbitrum and Optimism doing well early on, but they're not the end game. They know that. They're going to try to upgrade to ZK rollups someday if they can pull that off. I'm sure someday they will. But Polygon went straight for the gold. They said, we're going for ZK rollups. So now Polygon ZKVM is still technically in beta. And I think part of the problem is because it's so decentralized and so like fraud resistant, it can't, these are mathematical proofs. The gas fees are still not as cheap as we want them to be there. And so while it's in its beta, the ZKVM chain itself is not growing super fast. And I think that's, by design of the Polygon team. I know they've, told us, like, yeah, don't blow your wad on, liquidity mining yet. We're going to, wait until we come up with these new updates, which I think are coming in February, I believe. So we're going to get some cool updates in February. And then I think things are going to really heat up.
Yeah, DeFi Unleashed is there's 3 phases. Yeah, and then the third phase is that I don't know. I'm like you. I forget what.
I think it starts in March. Third phase starts in March.
There we go. Yeah, I just forget what's public though, Narb. Like what what we can't talk about. But yeah, there's
probably 50 or 100 projects that are like all waiting. It's like race horses like at the gate, or like dog races, like they're just waiting at the gate. I know like QuickSwap, we're holding off on putting a lot of liquidity mining and volume mining and stuff towards the Polygon ZKVM beta chain until we get like the word that okay, it's go time, and we get these new updates that are supposed to change things a lot. And then Protodank sharding is going to drop also. That's an Ethereum upgrade that will drop gas costs on Polygon by another 90%. And so what's that?
Blobs.
Yeah. So once we get these things, I know that QuickSwap is going to go mega hard. is going to go real hard in the paint on this one. Yeah. Speaking of, by the way, QuickSwap, I wanted to do a little fun shout out. We don't talk about QuickSwap a whole lot, even though we host this, it's a Polygon show, and I think it deserves saying, though. If people saw recently a tweet by QuickSwap that we had surpassed Uniswap, we had retaken our crown for top volume on Polygon. Little backstory, we were number one for, I don't know, year and a half. And then Uniswap came with their V3 and they surpassed us in volume. Now, we kept our crown of highest TVL, but then they surpassed us in volume. And at one point, because we were still V2 and they were V3, they had like up to 5 times our volume. It was very, demoralizing. It was hard. We're fighting against this giant. They got this $15 million grant from Polygon. They were putting that towards liquidity mining. They were using Arrakis, these juggernaut protocols, and they surpassed us in volume. But we, as we always do, QuickSwap never gives up, and we kept fighting. We built our own V3 in partnership with Algebra, with the dynamic fees, which now, by the way, Uniswap is going to be implementing themselves later on. But we fought back, and we slowly, over the last year and a half, have been gaining on them in volume, consistently gaining with very efficient. Our liquidity actually has a much higher efficiency than theirs is the mathematical calculations we're seeing, meaning, if we have $10 million of TVL, we do more volume than their $10 million of TVL, which is pretty cool. And now part of that is because our Merkle integration with all of our different automated liquidity managers, right? We have Gamma, and now we just recently added Steer and Ichi and DeFi Edge and all these ALMs that compete with these strategies. So now you can go to QuickSwap and choose any of these guys and try out different strategies. Okay, I want to put ETH USDC or ETHmatic. I don't want to manage it though. So you let one of these different protocols manage it in a decentralized way, fully decentralized, non-custodial. I'll put an asterisk there. I'm pretty sure they're all fully decentralized and non-custodial. I don't know. They're all different though. So do your own research. They all have different strategies. Go ahead.
Sorry to jump in. What is the best resource that I can refer to be able to gain more knowledge on everything you just mentioned?
Maybe the Dragonfly 2.0 blog series. You know what? Yeah, this would be cool. Darren, there any resource for these specifically for the ALMs, for people learning about these ALMs?
We have the docs. We have the QuickSwap docs. QuickSwap docs that we keep updating, and then there is the Dragonfly 2.0 blog series that's coming out with various installments over the course of the next months. There's already 2 installments, so there's a couple ways to kind of get more information on QuickSwap. Also, just following QuickSwap, there's always updates.
There's blog.quickswap.exchange that will just sort of highlight all the sort of new things. The ALMs have their own recent blog that highlights the liquidity managers, what they do, etc.
Perfect. Yeah, so these different ALMs, automated liquidity managers, are essentially what the answer in the market to, V2s. It was just 0 to infinity, a curve from 0 to infinity. If you put liquidity in ETHmatic, for example, or Bitcoin ETH, you were literally saying, I will buy or sell either asset infinitely from 0 to infinity, depending on where the market goes. And then that you get the trading fees, but you might incur impermanent loss. Now, V3 made things way more complicated because you have to choose a range. You have to move the range. If you get out of range, you stop. If you say, I want to trade from, ETH, 2,900 to 3,100, and then ETH goes to 3,200, you're out of range now. So you have to change these things. So these automated liquidity managers, Gamma, Steer, Ichi, DeFi Edge, all through our Merkle integration that we've built, which brings these all together. These all compete now to give the users strategies so that users can continue to supply liquidity as opposed to just institutions. Because typically with V3, it's just institutions and very high, they have full, firms creating strategies. But these ALMs are like strategies for users so they can continue to participate and gain yields, which is really cool. So I don't know what, we actually are trying to analyze, and we don't know how, but it's been 4 or 5 days straight that we've been beating Uniswap by quite a bit in volume, and which is we're really proud of. It took us like a year and a half of building all these strategies. Our liquidity hub is, oh, by the way, that's not even including our liquidity hub. Our liquidity hub in our solver system isn't even being factored into that analytics yet on DeFi Llama or anywhere. So we got to get that included, but that's more volume that's coming. Then there's the volume coming through these ALMs because some of them have very tight ranges. Some of them have better strategies. And so, yeah, we've been beating Uniswap for like 4 or 5 days straight, I think. And it's really cool to see. It took a lot of fighting and a lot of effort and a lot of, support from the community, but we've surpassed Uniswap, and we also have almost as much trading.
The Quab.
And Clob is coming soon. Yeah, our central limit order book system and our V2 perps, which will all add to that volume. But shoot, I forgot what I was just gonna say.
We never talk about QuickSwap on these spaces.
Yeah, we really don't, but it deserves an update.
I heard rumors though about some kind of airdrop happening though. What's going on there? Does anybody have any alpha this year?
Yeah, we can actually. So before that, I remember what I said. So actually, we can say something about it. We could say something. We could tease. Right.
There's I know that the marketing department is going to be screaming, but
screw those guys.
But there is.
We recently voted HR in the marketing chat. So HR gives you the full go ahead.
Did Darren just create a new department? Something else that's cool about that Uniswap stat is now QuickSwap. Over the last days, we're looking at this, and it's not just that we surpassed Uniswap. QuickSwap is now almost as much volume, just QuickSwap, as every other DEX on Polygon combined. It's not quite, but we had 46 or 47% of all trading volume on Polygon, meaning that means if you combine every DEX on Polygon, and there are hundreds, we have QuickSwap has almost as much as all of them, plus Uniswap combined. So really proud of that. It's a lot of people don't realize how strong QuickSwap has remained and its loyal community and things. Okay, airdrop real quick. Yeah, airdrop real quick. So we're doing I could say this, I think, and if I can't, oh well, I'm in trouble. Spank me. We're doing a Manta airdrop. So Manta's been doing very well. QuickSwap is also the largest DEX on Manta, and that's been going really well. Manta's token's been pumping and stuff, so this airdrop actually might be pretty significant. I can't say what the parameters are, like who will get this airdrop, but I will say I can say that it has to do with the QuickSwap community. That's all I can say for now, but that should be pretty juicy. So keep an eye out. And that was Manta gave us that and gave us permission to do this, so it's pretty cool. As the biggest DEX there, hell yeah. Okay,
maybe we could read some questions. Maybe if there's someone that has, because we only have 3 minutes here. I know you have to go to the Dogechain space. Maybe there's a question for the panel or for you, Rock.
And you know what else? Like, I could go to the other space, and since we haven't given enough time to the community, if you want to stay, Aztec and Narb's a super community guy here, and Owen and Michael, and we've got a bunch of great people here. If you guys want to like read questions from the community and go a little longer, that's okay too. I know a lot of the audience usually comes from this Twitter space to the next one, and I hope you guys still do come there for Dogechain, basically talking about Dogechain 2.0 coming to Polygon, Polygon 2.0 and CDK chain. And then also there's going to be a lot of talk about Doge and ordinals, Doginals and ordinals in general. But yeah, let's all stay for a few more minutes and we could do community stuff, and then we'll all hop over to the other space, and maybe you guys, if there's more questions, you guys can continue.
Is everyone on the panel good for another 20 minutes, 15 minutes maybe? Just throw me some kind of emoji if you're good for 15, 20 minutes. And then, we can go through some questions here. Rock, are you leaving us or?
Not yet. I'll leave in like maybe 5 minutes. I'll be late, but I'll be less late than normal, which means I'm early.
Okay, because there might be some trading questions here that we could ask the panel. Let's go ahead and go through. I'm on my phone.
A dragon is never late. He arrives exactly and precisely when he means to.
Nice. I love that. I see a lot of airdrop questions. I'm just scrolling on my phone here. Got Michael here. Let's go.
Wait, where are these airdrop questions coming from? How are people? Did someone leak this before I leaked it? How dare they?
Well, so I mean, I did a little mystery post yesterday based on the little I know, and then QuickSwap posted today that an airdrop's coming, but nothing else has come out. So I think that's why there's a lot of questions here. But I'm trying to look for an actual question for the panel. We got Beer and Weed here. They posted in our comments, want to win 5x Beer X Weed Polygon NFTs, follow, like, and reshare, tag 3. So there's another giveaway, and it's in our, actually, let me just pin it to the Jumbotron.
And Beer and Weed are here. Can you tell us about that? Is this special for our audience, or is this just you're giving this to everyone?
Yeah, it's only like a 5 NFT airdrop, and yeah, it's just a recent NFT I created on Corgi Studio, and I've just been enjoying listening to the All Roads Lead to Polygon space today because it's just been super dope. You guys talking about DCA, like how to invest, and I just had a question for the overall space. I think I had my hand up for about 45 minutes, but
Oh, sorry, man. We get carried away.
I was thinking like, yo, like as we approach tax season this April, like, is it smart to be investing in cryptocurrency? Like, is the market cap gonna basically just flatline from 1.6 trillion in the crypto market? Or because a lot of people I feel like that I've been talking to have been saying that we're not like in a full bull case scenario till after taxes, but I see it from this perspective that it doesn't matter if it's tax season or not in April, we're still in a bull case scenario. So I'd love to hear like all the traders' perspectives and the hodlers.
People, bro, that are tax loss harvesting are doing that before December, at least in the U.S. If that's what if that's if you're asking this from like a U.S. standpoint, but I'm not sure if anyone else has a different answer.
Yeah, I mean, I'll chime in on it. And this has been one of the biggest things in crypto since really crypto began. How, tax loss harvesting and selling off to pay taxes is a big part of every cycle. I want to be honest, I've never really noticed a major trend change around taxes at all. I do notice a lot more rug pulls happening around tax season. But as far as how it affects prices and that, some years it affects it negatively and everybody says, oh yeah, it's just tax season. And then other years, nothing happens at all. And other years then we go up. So I don't think really it has too big an effect on the actual full market outline. Maybe a bit of intraday chop and stuff like that. But yeah, I've never noticed it really setting the narrative myself.
Yeah, I would agree with that 100%. It seems like this is a conversation that we talk about every single year, whether it be right before the year's end or right now during, tax season when people are filing. But yeah, I really don't think it has that much of an effect. Like he said, sometimes it seems like the market does do something funny and sometimes it doesn't, but the market also goes up and down all year. So it doesn't even, like, if the market goes down right now, it doesn't even necessarily mean that it's correlated to people, paying their taxes. It could just be the market itself doing what the market does. So I don't know. Personally, I don't really pay attention to that kind of thing because, like I said, it's something that we talk about every year. But I don't know. It hasn't had a major effect for me personally, anyway.
I think one of the much bigger things that's coming up is the support program from the Fed for the banks in the US is running out in April, March. And if they are not renewing it, it could mean that one or the other bank in the US will start failing. So this could create another kind of crisis where people tight their budgets. And if they say, okay, they don't want to let any bank fail, then they need to open the money gates, and then we definitely know that crypto is growing.
Now, on that's like a really great macro point, MC squared phi. But the thing is just to note, last year that was a very bullish thing for Bitcoin. Every time a bank was failing, it seemed the narrative was like, hey, we're going to be hedging into Bitcoin because the traditional finance is collapsing here. A lot of banks around the world. It's really a global issue also.
That's true.
And I'll just like to add
Totally true.
also on your on the taxation part, the United States or maybe even North America in general trades, and correct me if I'm wrong, this is looking at the statistics here, 10 to 15% of the actual Bitcoin volume. So if you're looking at, how much North America or United States commands of the global spectrum, it's a fair chunk, but it's not a major amount where U.S. taxpayers who do have to realize and make their adjustments would cause, I think, a friction in the market, given that a lot of the volumes globally and a lot of countries in the world don't report or pay taxes, especially on crypto.
Yeah, I love that, AK. Explaining that it's a global market. Also, there's a pro to this entire conversation, which is it's not just people having to pay taxes or tax loss harvesting at the end of, let's say, last year. It's also people getting their tax refund and then buying into the market. I know plenty of people, to be honest, IRL, that are getting their tax refund and telling me, and I'm telling them, like, you got to do your own research. But you start getting those messages where people are like, I want to use my tax refund to actually buy more crypto. So I think there's a give and a take. There's a pro and a con, and I think what AK said is really important to note, that this is a global market. So it's definitely it's a good question. I think it's something to consider and think about, but it should align with everything else, in your thesis, and the technical analysis, the actual chart, the candles that are printing, the fundamentals and the macro. You got to mix it all together. So it's a good question, but yeah, it's a global market.
Yeah, I think it was also just an interesting year in particular to analyze this, like just the short term in Bitcoin just till April, just because it's also the Bitcoin halving. So it'll be interesting to see, like, by April time, when people actually have to declare their profits. Like, is Bitcoin going to skyrocket to 60K? And a lot of investors are going to be skeptical of declaring those right before the year ends. You know what I mean? So this could be a factor that kind of holds Bitcoin back from that sense, that it could be a late April pump because people aren't going to want to declare massive profits, but that could at the same time not have an effect because Bitcoin's decentralized and the blockchain. So that's kind of why I ask.
Hey, I'm going to run, guys. See y'all, and have fun. Have a great weekend. And once this finishes up, come on over if you want to hear more about Polygon 2.0, Doge Chain, Doginals, etc. We'll continue the party over there for another hour or two. See you guys. Bye-bye.
Have a good one, Rock. Have a weekend.
Peace.
Yeah, we'll close this space down soon, I think, Darren. Yeah. Any other questions? Beer and weed?
I know Crypto Ryder is in the space. He's a community manager for Corgi. I know he runs a lot of good dialogue when it comes down to crypto and stuff. So if anyone's interested in that type of stuff, Corgi Studio is definitely a place to be building within Web3 and the Polygon ecosystem. And he's also taught me a lot about QuickSwap. So I really just want to show my appreciation for Corgi Studio right now. But as for a question for the space to kind of educate,
I know Ryder, he's a good guy.
So I'll take my exit here, guys. Appreciate everybody here on the spaces, and thanks for having me on the panel. Look to come on future shows, and if anybody has any trading, looking for any trading help, has any questions, wants some pairs looked at, or anything general, again, not selling any services or anything, you can reach my DM, and I'd be happy to grow and engage with the community. I am new on Twitter. Or X, and happy to be around and provide some insight and grow with a lot of like-minded individuals. I've been seeing some great followers come in from here, and you guys are all a lot of talented individuals, and can't wait to dive in and get to know a lot of people and grow investments and knowledge together. So thanks for having me on this space, and adios. Have a good weekend.
Thank you for being here, AK.
Thank you, man.
Hope you have a great weekend. Yeah, let's all say, or Michael, you jump in. I was going to say we should probably all say bye.
Yeah, exactly. I have to jump because I'm transporting some furniture from the first floor to the cellar. So anyway, my father came to help me. Thank you very much. It was awesome space. And yeah, if anyone searches for trade automation and you don't have time to trade or you don't know how to do it, I have some education for that. Go to my account, right? Check it out. Other than that, I mean, I love the space and the knowledge that you shared today. I learned a lot as well, as always. And yeah, you guys are doing an awesome job, and really appreciate that you organize this such a good way every week. You guys are really killing it. So thank you very much. Love you all. See you next Friday.
See you next Friday, brother. Have a good weekend. Yeah. Anyone else want to say goodbye?
Goodbye, everyone. Thanks for having me.
It's always good to have you here, Narb. And you got to come next week, brother, so we can do the Roman Coliseum thing.
Yep,
Good
I'll see
times.
everybody next week, next Friday. Cheers.
Cheers. Anyone else want to say bye?
Yeah.
Let's grow.
Thanks for inviting us as well. It was very joyful and interesting. And if you want to get on-chain verified strategies or proof of performance, that's pretty much what we are building.
Nice.
Yeah,
Have a good weekend, brother.
I'll throw my goodbyes into the hat as well. I've still getting over a dose of man flu, which has gone on 2 weeks now. I think me and Darren are both in the same boat with that. We should stop hanging out together, Darren.
I told him not to kiss me. But no.
Yeah, so listen, if anybody's looking for a community that's going to be jumping straight onto ZK EVM once the new aggregation layers are up and running and we have bridging over from Ethereum, I'm the founder of Nova DAO. We're fully DAO based, but we do have a development studio. We've launched things in the past, such as GameFi and DeFi platforms. So again, right now we're on Ethereum. If you want to jump in and take a look before that we're over on ZK EVM, just click into my profile as dev at Nova DAO. So jump into it, have a look. We're looking to bolster up our community as well. So if anybody on here is interested in lending to a small community, but a community that wants to get a lot more active, be that in our Telegrams, Discord, Twitter, etc., do join in, give a shout. We're always looking for more active members to join us. And thanks, Simone, for having me on the spaces. Always so cool to be able to sit up here with, again, such intelligent people in the actual Polygon community. Like, it's always a joy to sit down and have a chat with everyone. And for everybody that's just listening in on this, all the stuff that you're told about, like Polygon, QuickSwap and stuff like that, this is the closest you're ever really going to get to what's essentially insider trading, but legally. You know, when you hear about the stuff that's being built, when you know the actual tech that's behind it, you have an edge on about 99% of the market. And look, that's what I've ran with for the last 10 years, just understanding and listening to the actual builders that are in the space. And it's worked out for me for the last 10 years and may work for another 10 and 100 more. Thanks again, all. Been great on with you all.
Well, hope you recover fully, brother, and I hope you have a great weekend. It's great having you on, Owen. Does anyone else want to say goodbye?
Yeah, thanks for having me on. Great space. Love the trade talk. A lot of good opportunities. Definitely in Polygon, staying active. But overall, crypto market talk is great to hear. Like I was saying before, I think now is a great time to be buying into crypto. And it still feels early, so I think you don't have to overthink the strategy, right? Just buy, just stay active and be engaged in the community, and you'll see new opportunities as well.
Good times. All right, and Beer Weed, do you want to say bye before we close?
Yes, just thanks for having me on. I'm super excited to see the future of QuickSwap as a decentralized exchange for people to affordably transfer Matic from different chains and all sorts. I think it's way better than Uniswap, its competitor at the moment, and all the things it offers with bonds, farming, and their own token. And I also want to just shout out to Polygon for allowing people to build in Web3 for affordable gas prices. Like, it's not absurd like Ethereum, and I think it's just a amazing opportunity for anyone trying to release stuff within Web3. So thanks for having me on.
Good times. All right, everyone. Well, it was a great conversation, and I definitely learned many things. It was cool to hear different perspectives on investing and trading. And we'll be back next week with another All Roads Lead to Polygon. Shout out to the QuickSwap team and Polygon for contributing to this space and making it happen. And I hope you all have an amazing weekend. Take it easy, everyone.